does that only take this even further and become the next reason for a reset?
Yeah, I think that will, because remember, the rupee-dollar exchange rate is important for foreign investors, and without the US-India trade deal, our current account deficit clearly is growing bigger, which is putting pressure on the rupee, which discourages foreign investors from coming in. So once the FTA is in place, I think that will put a lid on rupee depreciation, and that plus decent valuations plus earnings growth should bring foreign money back to India.
Manish, just want to talk about that point. How important, in your opinion, is this dollar value, and rather the rupee value as in relation to the dollar? Because we're plumbing new lows. What are the implications for our current account deficit, if anything, and for companies in general? Is that a major risk factor for you?
So, yeah, I mean, the $42 billion last month's deficit number, merchandise deficit number, was a bit of an anomaly. And having said that, I think current account deficit currently is well within control and nothing to be really alarmed about. I would believe a 90 to the dollar on the rupee front is a bit exaggerated. I mean, you should see some pullback come from these levels. And I think this is the single biggest reason which is scaring away your foreign institutional investors, and of late we have seen panic even within the retail investors who have sold, the broader markets per se. This is one. But I think on the US trade deal, I mean, it's a no-brainer now that, most of that is getting factored in. We have been hearing commentaries from the government every day that it's around the corner, which means that the markets are broadly pricing in the trade deal. Okay, I think more than that, it is basically the GDP print, which is also anticipated and which is likely to be very good, and the outlook going forward. These are two major things. But I think on the US trade deal side, portion of that has already got priced in. We are not going to see a great positive shocker if that was to come through, I mean, just today, because a lot of it has got priced in.
Okay. Manish and Saurabh, thank you so much for joining in. And as we mark this, I think, historic moment for Indian markets, where you've hit that all-time high of 26,277. But like we've been saying, it's been a tough journey and an arduous journey. It's taken some 289 sessions, 14 months. Sharad Dubey talking about what that journey has looked like.
Well, that's pretty interesting, Tamanna, but Alex had promised me one thing, that the moment we touch the all-time high levels, I will give in a dance. And of course, there will be a bhangra, a little bit of it, but let me take you across the entire journey, how it has been. 289 days this trading session has been there. Then it created a new record high in the day's trade. Stocks which contributed to the all-time high levels, there are three large players, contribution heavy: Bharti Airtel, ICICI Bank and Reliance. They stood the test of the time, if you had to say. 52-week high levels, only 3% of the stocks in Nifty 500 are at their 52-week high levels. That means broader markets have not participated so much. 52-week high levels, MCX, Shriram Finance, AB Capital, Hero MotoCorp, these stocks would be in focus. These companies are also near their 52-week high levels. Max Financial, L&T also make it to the list. Now you must be wondering what Nifty Midcap has actually done in this space. Nothing, literally. Full flat, almost 0.4% up. And if you look at the midcap winners, of course, BSC, Vari Energies, Paytm make it to the list. Broader markets, also Nifty small cap in the red right now, also is down 8.5%. So there's no much catch up happening in the broader markets, and that's where maybe value buying might start. Also, let's look at the small cap gainers. There were some outliers. Let's pull that chart out. This includes Force Motors, Ather Energy. These are the stocks where we see the strong momentum coming in. Nifty gainers, Eicher Motors, that has gained nearly 43% from this previous record highs. And also there are some smaller names also, which includes Canara Bank, Federal Bank. These stocks have also given a very, very strong return. And lastly, if you look at the sectoral gainers, that's also been the story. That is the Nifty PSU banking space. What a strength that has come in. A lot of factors. And these names include Indian Bank, Canara Bank, and also Bank of India. All throughout, they have given a very strong numbers. But there are some laggards also. Very small, very negative, but not so much also. We can say that Trent, Tata Motors, PV, Bajaj Auto, Coal India make it to this list. And the gains from the 52-week low, they include Nifty, 18% coming in from there, and M&M, Eternal and Bharat Electronics making it to the list. So this is the entire story which we have gathered from the last time when Nifty hit its lifetime high levels, and after testing the markets, our and everyone's patience from 14 months, we are back to the Nifty's record high levels.
And since you've been speaking, and over the last 10 minutes or so, we've given up a little bit of ground. So therefore, I'm going to have to postpone that Bhangra.
You're making excuses, Alex. Do you want to do the waltz? I think we're okay with that also.
No,
you can also jive. No problem.
I have 2 left feet. I'm a great singer, but I'm not a very good dancer. Oh. Having said that, let's talk about a pack that is done particularly well. It's off the high point of the day. Pull up the metal index intraday move. It's about 0.8% off the high point, and it's up about 0.1%. So you've seen a bit of a coming off of those levels for quite a few of these indices. But really the question is what it's done over the last 3 months or so, where quite a few of these stocks have gained quite considerably. And there is quite a bit that is playing out on the global stage as well, that is supportive of the underlying prices heading higher. What is the trend heading into next year though? Is that durable? Let's ask Rakesh Arora, who is the founder of GoIndiaStocks.com, and he's got such a great view and clear view on metals, which is why we love to speak to him. Rakesh, the question therefore is, what are the underlying trends that you're seeing? Are they durable? And would you be positive on metals heading into 2026 as well?
So good morning, Alex. If you look at commodities, there's one pack is physical commodities, and the other pack is, more like commodities which are kind of traded on the exchanges in a big way. So physical commodities are not doing really well. Meaning if you look at oil, or you look at steel, you look at iron ore or coal, they are not doing that well. But if you look at gold, silver, aluminum, copper, they are doing reasonably well. So that tells you that there's a little bit of dichotomy over there, and there is money flow involved, which is really pushing up the price of commodities. And the other thing which is working a little bit in favor of these, base metal and precious metal, obviously we know that for gold, central bank buying, and then the craze of ETF investing has actually pulled gold prices up. Silver has moved up in sympathy. Copper and aluminum, again, they have very low inventories, so pretty easy to really push the prices up. And also this AI thing, which is really adding to the demand for, copper and aluminum in a big way, while the renewable theme is actually taking a little bit of a backseat at the moment. So, both these commodities have seen a big jump up. But when I look at, the data coming in the last 2 months or so, inventories of all these commodities are also rising. So I don't think these rallies are going to be sustainable. And, stocks have actually moved up quite a bit. So there's no scope on the valuation side also. So I would say for investors to book a little bit of profit and wait for a better entry point of these names.
Weakest place in your view in terms of metals? I don't want to ask what are the top picks, because you clearly think that values are not sustainable and people should book profits. So in that case, Rakesh, what are the most vulnerable counters that you think have run up beyond what it's worth?
So I think, ferrous metal, stocks have gone up, but, they are seeing earnings downgrade. And I'm expecting that Q3 is going to be even weaker because steel prices have moved down by around 2,000 rupees with very little impact on raw material prices. So margins will be much more, squeezed in Q3 as compared to Q2. And Street has been very optimistic. So there should be at least 20% earnings downgrade for the major steel names for FY26 itself. So in that scenario, I don't believe that steel stocks would be able to do much better. Base metal do have the benefit of, rising commodity price and rupee depreciation also helping them a little. So maybe they might hold on a little better than the ferrous stocks.
Rakesh, we've had a few accidents over the last few weeks as well, right? Novelis was one to factor in. As a result of that, do you see any relative winners. One man's loss is the other man's win, and so therefore Nalco management was talking about how they're confident about certain benefits accruing to them. Is that something you're looking at?
So see, Novelis is, uses largely scrap. 80% of their raw material is aluminum scrap, and they operate in a, cocoon in US, which is, surrounded by all tariffs, etc. I don't think there will be any gains out there. Possible gains is that, US automakers might lose out, and, some other, countries might export auto to US. But that's a very long shot, I would say. And so I don't really see too much of impact on primary aluminum prices because of the Novelis impact.
And I think the big takeaway for me and for our viewers is going to be that you should have a little bit of caution and maybe take some money off the table right now because of the kind of gains we've had. Thanks so much for joining us and speaking to us. Always a pleasure.
Thank you.
All right. We may have come off the all-time high, but it stands that 27th of November is when you hit an all-time high again on the Nifty 50 after a period of 14 months. A. Bala, who is Managing Director and Chief Executive Officer of Aditya Birla Sun Life Mutual Fund, joining in to talk about the significance of this. Bala, lovely talking to you as always, and good morning to you. Do you think that this, more than anything else, is sentimentally positive for the Indian investor, particularly the MF investor, small investor?
Yeah, good morning. Of course, it's a good period right now. There is a momentum it's picking up on the basis of hope that the tariff would come to some kind of conclusion, which will turn out to be more in favor of India. That's one. And second is the post-GST cut, while before GST cut and after GST cut during the festival season, this quarter most of the companies, especially in the auto sector, have actually done pretty well in terms of the sales numbers. But also actually improved the sentiment mainly towards the earnings of the companies falling in place. And third is the monetary policy has been quite supportive of growth in the country. By way of series rate cut that they have considered in the past. They have provided liquidity in such a manner the banking industry is able to have enough money in their hands to actually increase the lending. To look at this quarter, the lending growth has been better than the deposit growth. So all these things are leading to make a belief that the Indian market will start performing better than what you have seen in the last 1 year. From mutual investors' point of view, it's a good development given the fact that Indian retail investors have been continuously participating, reinforcing their faith on mutual fund industry by way of SIP, and that something would be something to cheerful for investors.
Mr. Balasubramaniam, do you reckon that the markets at large, whether it's the Nifty, Bank Nifty, or the broader end of the spectrum, are slated for much higher levels in the ensuing 6 months? 6 to 12 months?
I think there's a high probability for two reasons. One, as I just mentioned earlier, fundamentals are now getting shifted more towards a favorable zone. And second, US too will consider the rate cut given the fact there is a bit of slowdown that's also being witnessed in the US economy. Therefore, there will be a series of rate cut. And as a result of that, I also believe we'll see two things happening. One, of course, FII's buying will start coming back. And second, as the sentiment gets better, in every market, there are pessimistic who remain short in the market. Therefore, some bit of short covering too would come. Therefore, you would probably see the broader index moving to the new high in the next 4 to 6 months period.
Mr. Balasubramaniam, Tamanna here, and so great to have you with us on NDTV Profit. Thank you so much for your time on what is an important day. For a lot of viewers who look at equity markets, of course, for their own trades, but also from the perspective and the lens of what's happening with their SIP and their mutual fund investments, what is your message for them? Can they expect great returns in the next 12 months, looking at how the market forecast is, and have we turned that tide?
I think the experience so far, if you go by the experience, definitely the Indian the mutual funds have given reasonably good return as against some of the traditional investment that investors would have made. So great return, I think, should be considered one linking to the nominal GDP. Today, if you look at nominal GDP, is close to about 8.5%. Given the fact that inflations are low. In general, the corporate earnings goes between 11 to 12%. Therefore, investor expectation should at least be kept close to these kind of numbers. And as and when we actually get into animal spirit and the economic growth, definitely the additional return will come as a result of that. I think what is most important for investor is one, continuing to keep their investment by your SIP and keep the investment for a longer period. Don't get carried away by the short-term return not being up to your expectations. Therefore, start wondering what should be the investment. Instead of that, they should continue to keep their investment for 3 to 5 year time period. Then you naturally get to normal GDP plus 2-3% return you get, which is what I think one should expect. Anything that you get with the exceptional return that we have seen in the last 4 or 5 years, those exceptional returns should always be considered as a bonus rather than setting that as a norm.
Okay. Thank you so much for that, A. Balasubramanian there, talking about keep at it, slow and steady wins the race, and that's really been the case for the Nifty. I mean, 14 months to get here. That has been how long that journey has taken. We've slid off those highs, but nevertheless, I mean, you're 0.25% up after a huge jump up in yesterday's trade as well. So you're not seeing massive profit booking coming in on the Nifty, which is something to celebrate, honestly. We'll take a very short break. On the other side, we're talking to the management of Titagarh Rail as the company steps into the wagon leasing business. Stay tuned.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV profit has come a long way since
right, welcome back. Nifty, let's just do a quick Nifty check before we do anything else, because that's really the story of the morning. We've hit that all-time high and we are back above it actually, 26,281. So a new level now has been made for the Nifty, and that is very, very important, that you hit the all-time high and you didn't necessarily slide off, right? You managed to stay above it. A little bit of a dip. Look at that intraday chart. A little bit of a dip, but you're reaching to now close to the high point of the day as well, which is fantastic. What is contributing to this? I just want to look at that quickly before we get to the Titagarh conversation. So let's look at that very quickly. HDFC Bank, ICICI Bank, all the big private banks have come out to play this morning. Bajaj Finance, it's financials all the way. So if you want to look at a proxy for the India story, for the economic growth outlook, what IMF is also projecting for India, for the fact that if there is consumer appetite going up, people will just take more loans to buy those cars and consumer durables, etc., then that's the financials where that entire story goes. And this is what is being reflected right now. I'll be very keen to see what the FII, foreign inflow figure, is at the end of the day. Nevertheless, some corporate focus. Titagarh Rail is set to enter the wagon leasing business, targeting private sector demand of up to 2,000 wagons, even as wheelset shortages ease and production normalizes. Before we get to that conversation, my colleague Anushi, who tracks the company closely, is joining in to set it up.
Hi, morning Tamanna. So it's an interesting aspect that Titagarh has added in terms of a new revenue stream that they're aiming for. It's a wheelset, it's a wagon leasing business now is in focus. With this, they're aiming for a larger share in the private space as well by offering these long-term lease models is what we are seeing. Potential market also, if you're looking at that, is around a target of around 1,500 to 2,000 wagons, which will be procured on lease, is what the company is saying. Now, do note that in the last 2-3 quarters, there were issues regarding the wheelset availability on account of there being a supply issue from Indian Railways, but now that is largely behind, and from third quarter we'll be seeing these normalized figures. How the revenue stream then pans out is something that we should be watching out for, considering that the second quarter we have been seeing an impact in terms of where the numbers are concerned, especially in the freight business. Revenue is down about 24%, while margins stood at 10.5%. This is an account of the freight business that we're seeing, but the main focus also remains on the passenger rail side of the business, wherein there would be a high deliveries expected from FY27, which would be contributing heavily to the revenue mix also going forward. So that is another aspect that we are seeing. Apart from that, shipbuilding is also in focus, where they have a 500 crore of a revenue, almost 500 crore of an order book now. How that is expected to scale up is something we should be watching out for, apart from the order book of around 28,000 crore that is there, along with the JVs and its existing business which is there. So interesting play as far as where Titagarh Rail is concerned.
Okay, let's go across to Umesh Chaudhary, Vice Chairman and MD, Titagarh Rail Systems. Umesh, great to have you on the show, and thank you so much for joining in this morning to talk about this new foray that you're doing. Can you start by explaining to us why the wagon leasing business? What's the rationale?
Yeah, good morning. Always a pleasure being with you. We have been leaders in the wagon space for a while, and we thought that this private wagon business, which is there, is something where we would like to also focus on, because the railway new spate of ordering is expected sometimes to come up in the next few quarters. But in the meanwhile, we would like to have a more dominant play on the private sector wagon space. And one of the models that we have seen has been prevalent in some of the private wagon purchasing is a operating lease model. So we have, since we had in the past some experience on wagon leasing, thanks to the acquisition of Simco in the past, we have applied for this wagon leasing license so that we can have a more larger product offering to our customers.
Potential market size of this for wagon leasing?
So normally about 1,500 to 2,000 wagons we expect that would be taken by the private sector on a wagon leasing model. And then, that's something that we believe worldwide has been a more prevalent model of taking wagons. So we do believe that it might grow going forward.
Sure. Would some bit of this, Neeraj, good morning, would some bit of this be for captive use?
No, this is not for captive use for us as such, but this would be only for the client. So we would be primarily focusing on operating lease model, Neeraj, and not on a financial lease model. So that's not the whole idea.
Okay.
Then again, there is a possibility of the wagon maintenance getting opened up. So if the ownership of the wagon remains with us by way of a wagon lease model, that also opens up the wagon maintenance business opportunity in a much more significant manner.
Okay, by the way, as we speak, even the Sensex is at record highs now. So keep that in mind. It's a great day for the market. It's a great day to talk to Umesh Chaudhary as well. Now, Umesh, fill us in on what the second half looks like, right? Because we've had an iffy first half for most companies in your sector, including yours. And as things stand from what you were 2 years ago, you've expanded into a number of, horizontals or verticals, as you may like to say, right? What is happening with the business? How does the second half or the next 12 months or 18 months look like? Does it improve meaningfully relative to what's happened in quarter 2, for example?
So absolutely, Neeraj, the Q1 and to a great extent Q2 has been very badly affected because of the non-availability of wheel sets, and we believe that this is something which is now completely a thing of the past for two reasons. One is that the problem of the rail wheel factory has been resolved, and the second is that by Q4 of this year or Q1 of next year, the joint venture that we have with Ramakrishna Forging for the wheel plant, for setting up the wheel plant, that will be operationalized. So this intermittent problem that we have seen come up on account of lack of wheel set availability should permanently get addressed as we go into the next financial year. As far as the passenger side is concerned, this is the period, as was being mentioned by your colleague, this is the period FY27 is where the transformation really happens, and then it stabilizes to a new level in FY28. So we have laid out a strategic plan, a guidance document, if you may, a quantitative and a qualitative guidance of how the businesses are likely to ramp up for the next 5 years. And that kind of expresses how the business model on the passenger side will grow. From 12 coaches in FY25, we are targeting 100 to 120 coaches this year, and 200 to 220 coaches in FY27, going up to 275 to 300 in FY28. So the ramp up is from 12 to up to 300 in 3 years. That's the kind of growth we are talking about.
Wow. Okay. And Umesh, therefore, just to simplify this, what happens, the expectations of what numbers will get delivered from you as the leading company, but that entire spectre, right, until that little bit of a wobble hit, were very, very high. Do we get back to winning ways, let's say FY27 onwards? Is it difficult to call that right now?
So
in reported numbers terms is what I mean, sorry.
Sure. So Neeraj, as far as the passenger side is concerned, up to FY28 for one of the SBU, which is the Metro SBU, we are already backed up by confirmed orders. In Vande Bharat SBU, we are confirmed. We have our plans are backed up by confirmed orders right up to 2031. On the passenger side, we are only having an order book of the next 4 to 4.5, 5 quarters. So we are expecting the new spate of the tenders, and we are hoping that should come out soon. That if it comes out in the Q1 of next financial year, by Q1 of next financial year, then what you are saying that the trajectory of the freight would continue. And the reason why we are bullish is because Railways has done a phenomenal work in the last 3, 4, 5 years, of course, during the entire NDA government. But if you really look at it, recently they came out with the bulk cement policy, the track expansion. Yesterday also we saw some capacity expansion happen. So with all the wonderful work in terms of creating infrastructure, coming up with new policies to attract traffic, there is no way that wagon demand should over a period of time see any slowdown.
Okay, thank you so much, Umesh, for speaking with us. Titagarh management there talking about their foray into wagon leasing. But today is that kind of day when you look at the markets. Titagarh rail stock doing okay, but it's the markets that catch your eye. Sensex has joined the party. The Bank Nifty has joined the party. The Nifty Auto has joined the party. So you now have several indices which are at new levels. We should get a technical analyst on as well to talk about it. But this is exciting times. I just want to pull up the market breadth for a second because just look at where that breadth is going. Narrowing a fair bit. So we have to still wait and see if we sustain. But this is the market breadth. As far as the Nifty is concerned, we have actually hit a 26,300 level and then come back. So the first time in its history, the Nifty has hit a 26,300 level. Harsha Upadhyay, CIO, Equity President, Kotak Mahindra AMC, joining in now on the conversation. Harsha, what a fabulous day to have this conversation and, try and understand what really is going on. Is this a one-day new series kind of fueled sentiment coming in? Or is this now a turn? We've had two interesting notes from foreign brokerages today, giving the sense that the worst is behind us. They're talking about a 30,000 level for the Nifty by next December. How are you looking at the moves?
Good morning, Tamanna. Clearly, I think the undertone in the market has turned quite bullish over the recent times, I would say. This is based on a couple of expectations. One, from a fundamental perspective, there is an expectation that going into second half of this financial year, you are going to start seeing improvement in terms of earnings growth rate on a year-on-year basis. And it's quite likely that even in financial year 27, that trend will continue and probably strengthen a bit. So that's the expectation on the fundamental side. On the other side, from a global perspective, there are expectations that at some point of time in the near future, there will be a favorable deal between US and India in terms of the trade relationship. There is also an expectation about a peace deal between Ukraine and Russia. And of course, over the last year or so, India has kind of underperformed against most of the emerging markets. So to that extent, the relative overvaluation that we usually used to see of India over other emerging market has also moderated a bit. So all of these factors are leading to a kind of a bullish undertone in the market. And we do believe that gradually things are going to improve from a fundamental perspective.
What is that improvement going to be led by? Today, of course, financials are ruling the roost. Not just financials, actually. The Nifty IT doing phenomenally well as well. So IT, banks, all participating. And it's looking more broad-based than just the 50 stocks in the Nifty. But in your view, where does this next leg of the rally get led from?
Tamanna, when you look at the earnings trajectory for financial year 27, clearly financials are likely to lead that earnings uptrend. Along with that, there are many other sectors which are reasonably placed, I would say. And most of them are consumption-driven sectors, be it consumer durables, be it automobile, be it consumer services. Many of these segments are likely to see earnings growth rate of mid-teens or high teens. So to that extent, it's going to be a reasonably broad-based earnings recovery that we are likely to see in financial year 27. And from a valuation perspective, not all of these sectors are at same valuation. So to that extent, one cannot say that every sector is going to participate. Our comfort is more on banking and financial services to lead the markets from here on, which has been the case for last 12 months or so. But that may not have been very visible given the fact that market was flattish and we have seen some bit of outperformance from banking and financial services. But as markets are also looking to provide positive returns, we believe that the outperformance from banking and financial services will continue.
Okay. Harsha, the other question therefore is that does the portfolio strategy change for calendar year 27? I'm saying calendar year 26 rather, only because we are almost in December, right? So 1 month to go and then the new year. Does the portfolio strategy change? Do you include some of the stocks which were not performing, let's say in 2025 and might have a good dash, FMCG for example? How do you kind of align yourself?
At least FMCG view continues to be a little circumspect, Neeraj, given the fact that we are unlikely to see the earnings from that basket outperforming the overall average earnings growth for the market. So to that extent, neither the valuations have corrected to such a level that you can expect it to really lead the market, or there is earnings growth which is higher than the market. So we would be underweight in FMCG. Among the consumer-related sectors, this is probably the sector where we are not as comfortable as some of the others, I would say. So across our portfolios, we have been underweight on FMCG. But clearly, I think from a valuation perspective, the large caps and the mid caps are better placed as compared to small caps. We have seen not great earnings delivery in the last 12 months from a small cap basket. And also, as we go ahead, it's very unlikely that we would go back to a very high level of earnings growth rate in small caps, which has been the expectation currently, given the valuations where they are. So to that extent, our portfolios would still be tilted towards large caps and mid caps wherever the mandate allows that to be done.
Okay. Harsha, the lead indicators point towards an uptick in a lot of core economy pockets as well. Is that something that might do well? Infrastructure, commercial vehicles, etc. Does that make a bit of a comeback, even if the broader GDP not really hit 8% or may not hit 7.5%, maybe at 7%, maybe slightly lower? But do the economy-linked sectors make a dash going ahead?
Neeraj, when you compare it to their growth rates of, let's say, 2020 to 24, probably they are unlikely to see those kind of earnings growth rates. But clearly, they will also be participating in the overall growth of the economy. And there is reasonable amount of earnings that will come from some of these sectors which are closely linked to economy. If you are talking about government capital expenditure, for example, while it has moderated, it is still in the low double digits. So to that extent, there is order book growth. There is a higher level of execution that's happening from various segments of capital expenditure related segments. So overall, in the earnings delivery, even these sectors will participate. But it is just that probably the market was led by capex-driven stories for the past 4 or 5 years, up until I would say 24 or early 25. That situation may not continue going forward, whereas there will be select pockets within those capex related stories which will still continue to deliver earnings and which will continue to probably outperform. One needs to be a little bit more selective in that pocket, whereas consumption probably will be the one which will drive the economy as well as markets from here on, along with financials.
You know, Harsha, I'm wondering whether you will see small caps also catch up. While it is very exciting on the Nifty, etc., and we love seeing the Nifty and the Sensex as, you know, the benchmark, they are the benchmarks. But the fact is that this is 50 stocks and then a lot of them are in the 30 stock Sensex as well. As the broader markets are concerned, they have left a little to be desired. And the fact is that is where a lot of retail investor and smaller investor interest lies. What do you see changing for this bucket of stocks?
Tamanna, for the broader end of the markets to outperform, clearly you need earnings growth rate to really come back to earlier levels. What happened between 2020 and 24 was very, very unusual, right? Not only the overall earnings growth for the market went up beyond the 10-year or 20-year average growth rate of about 14.5%. The mid and small cap basket really did much better than large cap basket in terms of earnings. The earnings for large caps went up by about 18% CAGR, whereas for mid caps and small caps, the earnings growth rate during that period was 25% plus. And that's what kind of led the market rally at the broader end of the market during that period. Now, the same expectation continues. However, the delivery has been much, much more muted for small caps now. In fact, there have been few quarters in the recent times where they have actually degrown, forget 25% kind of positive growth rates, they have actually degrown. That situation has to change, and we are not seeing any indications of that situation changing right now. And that's where we continue to be a little skeptical about small caps participating in this leg of the rally. However, if economy continues to improve along, there will be a point of time where you will see at least some of the select businesses in those pockets as well delivering earnings. So to that extent, you may still have to be a lot more selective in picking stocks within small cap basket.
You know, in terms of autos, just trying to understand if you're looking at the broad consumption theme, and you spoke briefly, Harsha, about the broad consumption theme being an important story in the next 12 months or so. How big a role will autos play that have been, especially four-wheelers, have not had the greatest time, say, even in the last several months?
Yes, we did see some pickup just during the festive season where across the board, most of the automobile segments delivered strong year-on-year volume growth. However, it needs to be seen whether there will be a follow-up buying during the festive season that has started now. So over the next couple of months, you will get a fair idea in terms of whether all of these segments are going to continue with the same kind of euphoria that we have seen during the festive period. But nevertheless, I would say that there are enough structural reforms that have been done to boost consumption. While it may not be uniform across all regions, all strata of the society, but we do believe that the consumption pickup that we have seen will continue with two-wheelers probably outstripping four-wheelers over the next few quarters. And with that thought in mind, we continue to believe that auto will be one sector which will continue to probably outperform the market.
Okay. Harsha, special day to have you, and it's great talking to you today. Thank you so much for being with us, and may the markets keep on rewarding us all during the whole of the next 12 or 13 months. But thanks for today.
Thanks, Neeraj.
Well, that's Harsha Upadhyay of Kotak Mutual Fund on his view, broad-based rally anticipated. We spoke at length about autos and what's happening to the CV cycle in particular maybe. And look at the kind of gains that an Ashok Leyland, for example, is sitting on today. I wonder if RK Forgings, Happy Forgings, etc. are also doing well. Ashok Leyland is up 5.5% now as we speak. RK Forging is about 1.5%. Happy Forge, no, not really, but a clutch of others. I mean, effectively, the principal one, which is Ashok Leyland, the principal proxy of a good CV cycle.
I think Tata Motors CV also not doing too badly. We should look at what Tata Motors CV is doing before we get to some of those reasons why. And Tata Motors CV, Tata Motors now, as it's called, is about 5% up. Let me go across to Sumit Sarkar, though, who's giving us some of the rationale. Sumit, so there is a note which is talking about why they think the tide has turned for the CV cycle.
Well, yes, BNK has come out with this channel check report where they are expecting that the CV upcycle has already begun, and that's the reason we are seeing this kind of a move when it comes to Ashok Leyland and Tata Motors in trade. So what is that note saying? They're expecting Ashok Leyland to have a wholesale number, the wholesale data of around 12,000 to 13,000 medium heavy commercial vehicles in the month of November, which will be reporting its number, that is the month of November sales cycle, that number they're expecting, and that number should come in the next 5 days. Now they're saying that their discussion with vendors and dealers indicate that a December month will also be robust, and the strength in the CV cycle will most likely continue till March 2026. So this means that next 3 months or next 4 months would be very strong for the commercial vehicle sales. And they're also saying that once the commercial vehicle upcycle begins, it typically lasts for the next 2 years. That is what their historical trend is suggesting, and that similar trend is expected to continue even now. They believe that the current cycle should surpass the FY19 peak numbers that we had seen in FY27, and FY28, that is the next to next financial year, will also be another record year for commercial vehicles. And they have on the basis of this findings that they have done based on their channel checks, they have recommended a clutch of stocks that should stand to benefit out of this. When it comes to the commercial vehicles, it's Ashok Leyland and Tata Motors. When it comes to ancillary stocks, they are bullish on Bharat Forge, Jamna Auto, and when it comes to financiers, they are bullish on Shriram Finance and Chola Finance as well.
Okay, thank you for that. So you have commercial vehicles in focus. You know, we're going to get more stock specific through the day. This morning has been a bit about celebrating the tide in the broader markets, and I want to see what we're closing the Nifty at before we wrap up, Neeraj, because it's been an exciting day. We've had confetti, we've had signboards going up, we've practiced our cheerleading. I think Sharad did a little bhangra also. So you've had the whole gamut of it, and you are still above the all-time high mark. So that's a great way to wrap up. So from Neeraj, me and the team that put the show together, thank you so much for watching. Stay tuned. Your specific questions to the stocks that you have next on Ask Profit.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Anushi Vakaria. Anushi, good morning.
A crazy morning today, right?
Crazy morning. You said it. In fact, if anything, that is an understatement because we've hit finally all-time highs. We don't have the poppers out yet, but we did have confetti and celebrations and placards to call out the all-time high. The new number is 26,306. The old number, of course, was 26,277, and that was held for practically about 14 months. It's been a long wait for us to reclaim that and move above it, currently trading very close to the previous all-time high. The question is, where do we go from here, and what individual stocks should you bet on? Joining us today is Kush Bora, founder of kushbora.com, as well as Lancelot Tikuna, who's the CIO of ValueX Wealth Connect LLP. Gentlemen, thanks so much for taking the time. My colleagues who do this show now have actually set the bar pretty high. Yesterday and day before, they've done over 60 queries each. So let's try and keep that momentum going and try and take as many questions as possible. I'm going to do my best. The first question we're taking today is on PCBL, and it's an interesting one. I do not know who the question is from, but it's a technical question asking, should it be held at this point? It's been bought at levels of 367. Uma wants to know whether to hold on and what the upside potential is. Kush, I'll come to you with this one.
Sure. Hi, Alex. Very good morning. I think this can be held on to. And the reason I say that is because despite the stock falling from those 600 levels, it is now starting to show very early signs and green shoots of stability and recovery. So yes, she's in a loss, but not a very big one, especially if you compare it from where the stock has actually started falling. So for a recovery trade up until her price point, I think she can continue to hold. I would suggest the recent swing low around the 320 mark, which is not too far away, as a very tight stop loss. If that is broken, then this recovery can fizzle out. But if the stock does indeed turn around, then you are looking at levels of 345 and about 370, which is very close to her buying price as the next targets. So yes, continue to hold. Keep a tight stop loss at 320.
Okay, so that's regards to PCBL is what we are seeing a hold as the rating over here. But with that, let me also welcome the first caller of the day. It's Rajiv, who's calling to us from New Delhi. Hi, Rajiv. How can we help you today?
See, I bought 1,000 shares of IDBI Bank.
Right.
At 102.45.
Mm-hmm.
I want to know short term or long term. I'm willing to hold it also for a year or 6 months.
Okay, so 6 months to 1 year is the timeline. In that case, let me go across to Kush. Kush, what's your view with regards to IDBI?
Sure. Hi, Anushi. I would suggest a hold on this one. Again, here, the buying price is not too far away from the current price. There is a rising trendline support. And the reason for that slight hedge is that, the stock's not really performed in the entire banking rally and hence doesn't really make the cut as one of our top picks, in the banking space, doesn't really, feature very high on the pecking order. But since the buy price is, very close to the current market price, the general trend slow, but, is upwards. Hence, I would suggest a hold. Also keep a strict stop loss at the 99 mark. On the way up, the stock will meet resistances at 105 and about 107. That's where you want to exit and perhaps switch to, some of the PSU names or even, or even some of the private banking names like Federal Bank or Axis Bank, which are, which are in momentum right
now. Okay. All right. So that's the view on IDBI Bank. Remember that if there's any buzz on the stake sale by LIC, that's something that you should watch out for as well, Rajiv, on the fundamentals. We've got a question from Kanti Bhai, who's writing in from Mumbai. And Lancelot, I'll take this to you, even though he says that this is a relatively short-term question. He wants to know whether he should put 50,000 rupees into Sun Pharma. And the view is not necessarily positive. Would you agree? Would you find a better opportunity elsewhere?
So I think if you look at Sun Pharma, a lot of their business is dependent on the situation in the US as far as exports are concerned, and their profitability significantly comes from overseas markets as well, and so it's no longer an India domestic story. So given that we are seeing some kind of resolution as far as US tariff situation is concerned, there could be an improvement in the operations of Sun Pharma over the next year or so. And in terms of valuations, it's trading at almost 60 times earnings, which is relatively on the higher side for a pharma company, and you don't. And so while he may be interested in buying it from a short-term perspective, but from a longer-term perspective, the risk-reward ratio is always against you when you buy it at a high valuation, because in case there's 1 or 2 quarters of surprises in terms of growth as well as earnings, that could see the stock getting re-rated downwards. And the other opportunities, if you look at in the same space, I think maybe Cipla is relatively a little better in terms of valuations, and has a lot more focus on domestic markets. So you could see that as a better option in the space.
Okay, so that's with regards to pharma packets what we are looking at. Next question now is from Lalita, who's writing to us from Bangalore. Now she's bought about 1,000 shares of Sagility at a price of 55. Wants to understand whether to book loss or retain it for the next 6 months. Kush, a lot of interest is what we've seen in this particular counter. There was block deals also where a lot of interesting names also emerged. I just want your technical check on Sagility.
I would suggest a hold on Sagility. The reason you're seeing the stock cool off in the last month or so is because it did have a very good run prior to that. If you look at the June lows of 37, the stock went all the way up until about 57, 58 levels. So it did have a good run from a medium-term perspective. Also, the cool off in the last month or so has been on fairly thin volumes. So don't be too concerned about this downtick. She's looking at about a 10% kind of a loss on this one. But I would suggest a hold on Sagility. Slightly deepish stop loss at about 47, 47.5, that zone. But I think the stock is now starting to maybe slowly but turn a corner. If 47, 47.5 zone is held, then yes, she could see 40 or 55 levels. Plus, in fact, there could be some profit also coming along her way. The stock could go on and hit the recent swing highs of 58 also. So I would suggest a hold on Sagility.
The view on Sagility. We've got our next caller. Venkat is calling us from Bengaluru. Venkat, very good morning to you. How can we help you today?
And very good morning, Alex. How are you? I'm not able to see you for some time. 2-3 days you were missing from your channel.
Yes.
Nice talking to you.
Yeah, absolutely.
And Alex, this is regarding the query on a mutual fund, which I would like to invest for my grandson.
Mm-hmm.
And it's about 15,000 per month I would like to invest.
Okay, so you want to, I was going to ask you, Venkat, whether you were talking about stocks or mutual funds. So clearly you want to invest in a mutual fund, right?
I'm talking about the mutual fund. I have got some stocks in my portfolio. I'm holding it already.
Yeah.
And I'm planning to invest about 15,000 for my grandson, who's about 7-year-old. This for a long term.
Yeah.
And I would like to have your views on any, good 2-3 investment, where I can put my money in.
So, Venkat, it's a very good question, but unfortunately, this particular show is geared towards getting you stock ideas. Having said that, if you're investing for the long term, I think a great opportunity for you to consider is a passive investment in the mutual fund space. And because this is very long term, perhaps you can look at some of the broader gauges, but let me ask Lancelot what he thinks about the Nifty Next 50 index. Lancelot, if we're talking about Venkat who wants to invest for his grandson, and in the mutual fund space, a low-cost option for the long term is generally an index fund. It's a great option, right? Would you say that the Nifty Next 50 is a better option than the Nifty 50 in terms of potential on earnings, etc., and potential upside?
Yeah, so I think, if you look at the Nifty Next 50 as compared to the Nifty 50, returns have been better because a lot of those companies are higher growth companies, and when they grow, they move into the Nifty, right? So when they mature and they achieve a market capitalization, that takes them to the next, to the 50. So it is a good option to look at, the Nifty Next 50 index fund or a passive. And being a passive fund, you get diversification across 50 companies, so your risk is also minimized, and you do not have to worry too much about the active management, because these funds over a longer period of time have generated returns which are slightly better than the Nifty. And so if that gives you better returns than Nifty, I think you should be happy because you have low risk because of the diversification.
Absolutely. And long term, it's great. Venkat, what I'll do is, since this is a mutual fund related question, I will take it up on the evening show, which is at 5 o'clock. It's on Your Money Matters, all right? So watch out for that.
Oh, very good.
Okay, so after the first chat, at the end of the first chat, I'll ask my expert to give you an answer on this question. But let's take the next question. It's on Hawkins Cooker. By the way, thanks so much for calling. Really sweet of you to have noticed that I was not here. I was somewhere else. But Hawkins Cookers, this is a question that is coming in from Mr. V. Murli, who's bought at levels of 7,996. And he's wondering whether he can hold for a period of 1 year and whether the potential return of 14 to 16% is apt to consider. It's a BSE listed counter. Kush, I hope that you have a view. Hawkins Cooker currently trading at 8,089. Would you hold?
So, Alex, the view would be hold. And he's got it at a very good price. So, that's one thing that, have to give it to him. But the stock's been a rank underperformer for, the most part. So what I would suggest is while you continue holding on with, your buy price as a trailing stop loss, I think you should perhaps consider exiting slightly higher, maybe not, the 14 to 16% mark, but another 5 to 7% or so. Because the stock does not really give you those kind of big movements. Plus, in the last few months, the delivery selling on this one has been rather high. So you would see the stock resist at slightly higher levels also. So about 8,200, and once that is taken out, 8,350 could be resistance for the stock. You take some money while you can. So Hawkins Cooker, I would suggest a hold right now, but book at slightly higher levels.
Hold is the view for Hawkins Cookers for now. But with that, let's move on to the next caller. Nikit is calling to us from Hyderabad. Hi, Nikit. How can we help you today?
Yeah, good morning. Actually, I have 1 lakh rupees to invest in Aditya real estate.
Right.
So I'm wondering, can I invest for next 1 year and what is the outlook for next 1 year? And I have another 1 lakh to invest in prompt intelligence.
Nikit, we'll just stick to one query as of now. For Aditya Birla, we've seen steep correction. That's about 37% or so in this last 1 year period. So, Lancelot, coming to you, overall real estate, we've been seeing weakness in terms of where the sectoral action has been concerned. With regards to Aditya Birla, what would your view be?
So I think, if you look at the last quarterly results that came in from Aditya Birla, there was a steep fall in the income and the profitability. Margins were also low. And while real estate, the business can be a little lumpy, given that, the various projects get completed at various points in time. I think from an investment perspective, if one has to look at investing in real estate, it may be better to look at a premium real estate player. Maybe a Lodha, they look at macro tech. They are probably a better bet at this kind of situation in the market as compared to Aditya Birla real estate.
All right. Hopefully that answers your question, Nikit, on the real estate space. We've got a question from Kumar, who's writing in on Hyundai, and he's asking whether he can start buying right now. This is a stock that made a silent comeback, if you will, after a pretty bleak listing, right? Let's pull up, if we can, the all-time chart for Hyundai, or you can maybe do a return from the issue. It's up about 17% from that point, and it's moved up quite considerably. The question, though, is this the price to accumulate? Kush, do you have enough data on the charts to tell our viewer, Kumar, whether this is the correct price?
Yes, Alex, I do. See, it's a good idea to start accumulating Hyundai at this price point. The reason being that, yes, the stock did have a very sharp uptick, after listing, it went sideways for a while, but it had a very sharp uptick since April. And then it's been consolidating, some profit booking has dragged the index, the stock a little lower. But now, if you see, the stock is finding support at the 2240 zone. Some green shoots of an uptick clearly visible, and plus generally it will have the tailwind of the auto sector doing well, and a lot of experts on the street being constructive around it. So I think all in all, if you want to start accumulating, this is a good price. You want to accumulate when the stock is consolidating and not always on the way up. So yes, you could start accumulating now. Even if the stock drops up until that 2200 zone, I don't think there is too much of a worry. The medium-term trend that began around the April, early April zone will still remain intact. So from here up until 2200, I think this is a good accumulation zone for Hyundai.
Interesting. It's a long play that we are looking for something like a Hyundai Motor, so that remains in focus. But now Sriram is calling to us from Chennai. Hi, Sriram. How can we help you today?
Yeah, thank you so much. I have a Nalco
right
stock which I bought, and It's been in the down for a long time, and now it has started showing up. I have bought about 500 shares. I really want to know, in the next 1 year, do we have any view on the stock going, say, around 8-10%?
Sriram, how long have you been holding this?
I bought it at 244, almost 2 years, I would say.
Okay. And another 1 year is what you're seeing. Got your question? Let me go across. Yeah, please go ahead.
Another 1 year, do I see any growth potential of at least 9-10%?
Okay, understood. Lancelot, your view with regards to Nalco, he's been holding it for 2 years, wants to get a perspective on how this 1 year would pan out for something with this counter.
I think if you look at most of the metal companies, given that metal prices are improving and you are seeing better realizations as far as these companies are concerned, you will see improvement in profitability as well as sales growth for Nalco. And it trades at about 7 times its earnings, which is a fairly reasonable number at which one can look at accumulating the stock. So if one is looking at a longer term hold, one should hold, or if you are looking to buy, I think even at this particular level seems to be okay to buy as well.
Okay. All right. You can buy at this level. But bear in mind that there are notes of caution in the metal space that have been voiced. In fact, we had Rakesh Arora, who tracks the space very closely earlier today, and he actually was saying that you might want to take some money off the table. So there are conflicting views in the metal space. Make sure you pay attention to what your time horizon is and what your risk return expectations are before you take a call. Whirlpool of India is something we're talking about next, and Muhammad is asking this question. He's writing in from Dubai. He's bought at levels of 1,077, or rather he's asking whether this is the right time to enter the stock at 1,081. There has been a promoter stake sale, as a result of which you're seeing pressure on the stock on the downside today, 10% or thereabouts. The question is, on the fundamentals, would you say, Lancelot, that this is a good opportunity to buy the stock?
So actually, if you look at valuations, I think it's relatively expensive, even though there is a view that these particular appliances companies will see greater sales as the affordability goes up, given the fact on the back of the GST cuts. But when you look at from a valuation perspective, if you're going to pay maybe a higher premium, to recover that premium will take a much longer time, and if sales do not pick up as envisaged, that could create a problem as far as the risk reward ratio, because this could be rated downward. So I would be little cautious on Whirlpool at this point in time.
Cautiousness is warranted on Whirlpool. Don't jump in just because the stock is down 10%. We've got our next caller from Bengaluru. Mohan is calling us. Mohan, very good morning to you. How can we help you today?
Morning.
Please go ahead.
Hello?
Yeah, I can hear you. Please go ahead.
Hello, I have bought Mostive Technologies.
Okay.
Quantity 50 shares at the rate of 267.
Right. What is the time frame that you had in mind when you bought it?
I have a time horizon for 1 year and things. So I bought the shares just because of it is a semiconductor company, so it will be having anything. So I just wanted to know what is further value.
Got it. When did you buy it, Mohan?
Just about two months back.
2 months. So you've seen an erosion in the value. Why only 1 year? If this is a semiconductor play, as you're saying, then wouldn't you want to hold it for much longer than that?
Yeah, I can hold it for more than 1 year or 2 years.
Okay. Lancelot, then therefore, since this is a fundamental view that is being sought, would you say that now is a good time to continue to hold? Would you say you take the opportunity to average?
So I would not average, because what is happening on these semiconductor plays, they are all dependent on the outcome which may happen 1 or 2 years from now. Most of these capacities are still to come on stream, and after they come on stream, we'll start to see revenue. So even if you look at Mostive, it's probably, even after this correction, it's trading at 100 times its earnings, which is a very high multiple for a company. Unless you see earnings growth doubling every year. So given that background, I would not want to average it at this point in time.
And I saw Kush's frown when I said average. I only said that from the perspective of long-term fundamentals, and I know that he does not like the idea at all. So with that caveat, let's move to the next question.
Yeah. Now the next one is also an interesting query is what we are seeing, and it's Coco who's writing to us from Kerala. His question is regarding Trent, and he wants to know whether is this the right time to invest in Trent for a long-term perspective. Lancelot, now if you look at Trent, it had been an investor darling for a long period of time. Since then, there was a correction on the back of valuation. But that after a 40% of a correction as well, do valuations continue to remain a concern for this counter?
Yes, when you look at the valuation, even after the 40% correction, it's still trading at 90 times its earnings, forward earnings. And given the last quarter results, the indication is that going forward, the margins are going to sort of have already come off a bit. The net profit margins as well as EBITDA have reduced. And so when you look at the potential in terms of earnings growth coming in on a sustained basis, it looks a little difficult because you are seeing the space is becoming challenging with a couple of new entrants also coming in. So given that background, I think paying 90 times earnings for the stock is a little bit stretched at this point in time. Maybe it needs to correct further and then one can look at it.
So that's with regards to Trent is what we are looking at. But now Suresh is calling to us. Suresh, hi, how can we help you today?
Yeah, hi, good morning.
Good morning.
Yeah, this is regarding KEC International. So, couple of days back, I bought KEC International. Total number of shares that I bought is 4,626 with an average price of 701. So, I'm just looking for a very, very short-term kind of thing. I know this might be a good bet even for a long term, but this money is completely allocated for this short-term trade. Can I understand, can it reach a levels of say 725 in the next say a weekdays or so? I can wait till a weekdays.
Okay, let me take this across to Kush then. Kush, your view on KEC International. There's been correction on the back of this news wherein they can't bid for future projects for power grid. So just want your understanding on the same.
Generally, it's the medium-term trend that decides how the stock goes. I know it seems a little attractive after the kind of news that came and the stock fell, and you're starting to see some sideways consolidation on this. But even before the news came about, the stock wasn't really doing well. It fell off those 935 levels, but has been sideways to negative ever since. Maybe this news was the final trigger to bring it down and perhaps consolidate. But does it go up from here? The volume and the momentum indicators don't suggest that yet. The uptick that you're seeing in the last few sessions is more of buying at these oversold territories and the stock going sideways. I don't see the stock moving too high too fast. I would in fact suggest that it's a good idea to maybe sell off and switch right now to the sectors that are doing well. IT sector started to pick up well, so maybe he could consider that. And financials have anyway been doing well, so it's a good idea to switch to some of these names rather than go bottom fishing on case.
Okay, all right. It is that time of the show where we get you a check on the F&O setup. And let's go across to Sharad to do that, because we've seen a little bit of volatility at those high levels. Of course, we're celebrating the benchmark Nifty 50, but the other one, Sensex, this is the monthly expiry for those contracts as well. What is playing out in the F&O space, Sharad?
Alex, you're bang on. There is a volatility aspect also. Today is the monthly expiry coming in for Sensex, but it hit its record high levels as well. Net, we see in the futures market also, we are seeing some kind of a tapering coming in, but it's a healthy move, a technical move generally for the next leg of rally, and we can see a sea of green still continuing, aided by financials as well. Let's pull up the contracts where the action is of course there. The PCR ratio for Sensex on the higher side, and look at it, the open interest is slowly coming down. But nevertheless, it's a very healthy setup when you talk about the options. BankX also, the story remains the same. And the large heavyweights, they are participating, but some reversals are coming in the smaller names. But HDFC Bank is holding up. And net, if you look at the overall contracts also for the banking names, they are still on the positive side with congestion in the call side. Stock-specific moves, let's look at it. Strong long developments in Ashok Leyland and Coforge, while on the other hand, short covering, these counters include Bajaj Finance and Jubilant Foodworks. Very strong technical strength coming in Bajaj Finance. Long unwinding HPCL and Oil India. Lower volumes also. But if you look at the shorts, that has actually built up, and Keynes Tech and Blue Star make it to my list. So a lot of action coming in, but net we are seeing a little bit of a positive cool off in the markets, but the setup is very strong.
Up is strong. Okay, so that's a positive update to take heading into the rest of the session. Of course, we've come off the high point of the day for the benchmark Nifty 50. The question is, where do we end today? And we're still trading with the edge towards the advances. But it is that time of the show where we hit the rapid fire round, and our experts, just a reminder to you to keep your answers as short as you possibly can. Even a buy, sell and hold recommendation is enough at this point. The first question is from Rajan Iyer, who's asking about Mankind Pharma. He's bought at levels of 2,524 in Jan of this year. He's asking whether hold for a period of 3 years. What's the view? Lancelot.
So I think you should hold.
Okay, the next question is from Kishore. He has a question regarding Maharashtra Bank, holds 2,000 shares, wants to understand whether to hold or add more. Kush, your view?
Oh, no, I would suggest a hold on Maharashtra Bank.
Indian Bank is the name of the counter. Shiva Chaitanya from Toronto wants to know. He's bought at an average price of 840. Should he hold for the short term? What would be the target? Kush?
Yeah, a short term, continue to hold. 850 is a trailing stop loss on the way up. 896 and about 920.
Ola Electric is the stock in focus. Sudhir from Bengaluru is holding 500 units, wants to understand whether to continue to hold for a longer period. Lancelot, your view?
So I think one is to wait for maybe the next 2 quarters, and a lot more clarity will be out on its battery issues as well as, on the growth. And then one can take a call.
Nagashri has bought Siemens at levels of 3315. Is it a good idea to hold at this point? Is there potential upside? Kush, what's the view?
Yes, continue to hold. Keep a stop loss at the 3150 mark.
Okay, Gautam wants a view regarding Roto Pumps. Average price of around 100, has about 250 shares for a 1-year time frame. Whether to hold or book losses. Lancelot, your view?
I would hold Roto Pumps.
Greaves Cotton, Srijit wants to know, bought at levels of 280. Should he hold or not? Kush, what's the view?
Sell. The momentum's not just there. Sell.
Okay, Dr. Abhishek holds 100 shares of Kirloskar Brothers, facing a loss of 18%. Wants to understand whether to continue to hold. Kush, your view?
Yeah, I'd continue holding on to Kirloskar. Trailing, rather, the stop loss on this one would be 1625.
Okay, RVNL bought at levels of 125. Would you hold or exit? Fundamental views being sought. Sujatha wants to know. Lancelot?
I would exit actually.
Exit, all right. So we've covered quite a bit of ground, but we'll be back on the other side of this very quick break to take more of your questions. So do stay tuned.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Niraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is
Hi, welcome back. You're watching Ask Profit, a show where you get all your stock-related queries answered on the show. You can either call us or even WhatsApp us. With that, let's move on with the next query, which is there. Now, Arjun is writing to us from Kolkata. He wants to understand a view with regards to power grid for the next 3 months. Wants to understand, will it cross the 3,000 levels is what we're seeing. Kush, let me come to you on this one. What's your view with regards to power grid?
Yeah, not very constructive on power grid. I think there have been a lot of queries around it in general also, but the stock's just not participated in the rally. Even when the markets are at an all-time high, the stock not participating is not a great sign. So I would not really be constructive on power grid. Can it cross 300? I would give it a very low probability for the next month or perhaps even a quarter.
Okay, all right. So avoid is the view on power grid. We've got our next caller from Gurugram. And Manav is calling us. Manav, very good morning. How can we help you today?
Hi, good morning. Good morning to everyone. So today I have a query on Amara Raja batteries. So I'm holding 25 odd shares at an average price of 1,290.
Okay.
So I have no issues in holding on to it for a longer period, but I'm at this this juncture, I'm a little confused what to do in this counter.
Sure.
Like to add more because the price is hovering around somewhere around 950 to 1,000 for the past 6-8 months.
Got it.
So should I add more? Should I hold on to it? Or should I book losses into it?
Understood. Let me ask Lancelot what he thinks. Lancelot, of course, despite the inroads that we've made with regard to electric vehicle penetration, we've still got a long way to go, and ultimately the battery technology is provided by this company, right? So would you say that this is something that you would bet on? I know that Indian manufacturers don't manufacture as many batteries as we would like, and you have the traditional batteries that Amara Raja also makes, but then considering the electric mobility prospects, would you bet on Amara Raja?
No, I think when you look at this company, its focus is mainly on the domestic side, on the regular batteries. And as far as the green batteries are concerned, since we haven't seen that much of sales growth, it's also not getting reflected in both profitability as well as revenue. If you look at revenues for Amara Raja over the last 2 quarters, they've been relatively flat. And actually, EBITDA was down about 14%. So given that, you are seeing also a sustained increase in commodity prices, I think one should be a little cautious in terms of investing at this time. And if you are making profits, one can look at, maybe taking some profit off the table.
If you're incurring losses, would you still book your losses?
I would book my losses and look at other options which can generate better risk return reward, as a percentage.
Okay, can you name 1 or 2 of them?
So if one is looking at the battery space or let's say the green automobile spaces, I think there's an option of looking at maybe even Castrol, because Castrol is a strong company and has now, moved its business from purely combustion engine fuels to also providing various lubricants for electric vehicles and various chemicals, and that is built on the back of its global research and development. So that can be a longer term, as a better option to look at.
Interesting. And what about M&M? Would you say M&M is a good prospect in the EV space?
I think M&M is definitely a good prospect in the space, but the pricing is a little bit high, at this point in time.
Okay, fair enough. All right. The next question is an interesting one. It's a question from Puneet, and he's asking, he wants to invest in mid caps in a staggered manner over a period of 3 months rather, and he's got 2 lakhs that he wants to deploy. So the question to you, Kush, is in the mid cap space, very small universe relatively speaking, but would you pick any for the next 3 months that have good prospects?
I would stick to the names that are doing well, because betting on strength essentially. So Max Financial is one that comes to mind. Just a disclaimer that we've released this also as a call on our advisory. So our investors, our clients are also into this. So Max Financial is something that we've been bullish on. That is something that you can consider as a turnaround story. Coromandel is starting to turn around well. So that is also something that I would keep an eye on. So some of these names are now starting to do well. Plus now Nifty hitting new highs, mid caps index already at new high. I think there is going to be a continued traction in this space as well. So it's an interesting query at an interesting point in time. Max Financial and Coromandel are the 2 stocks that I will have on my radar from this space.
Okay, so those are some of the topics that we are seeing in the mid-cap space. Continuing with that, we also have a caller, Sridevi, who's calling to us from Hyderabad. Hi, Sridevi. How can we help you today?
Yeah, hi. Actually, I have a Shipping Corporation of India, 300 shares at the rate of 330 rupees.
Okay.
So can I hold these shares or can I buy more shares to average?
Sridevi, when did you enter in this counter?
It's almost 1 year back.
Okay, and your outlook is for the next 1 year as well, or you're looking for a more short-term outlook now?
Yeah, actually I entered for a short time, but I have to be hold because I'm in the loss.
Let me go across to Kush then. Kush, your view with regards to Shipping Corporation?
So I would suggest a hold on SCI. Generally a little constructive on the shipping space. SCI also had a very good run. The fall in the last month and a half has been on fairly low volumes. Also, technically, the stock is now at the 61.8% retracement mark, which comes to the 229 level. So yes, there are some signs pointing that you could continue to hold. Does the stock go back to 330 levels in a jiffy? That is something that I'm not too confident about. So my suggestion would be, as the stock moves higher to about 260 and then the recent swing high of 280 zones, you might want to start exiting a little. The losses that you're incurring currently would be considerably lesser at that point in time. So book out at slightly elevated levels of 265, 280. 330 seems a bit of a stretch, at least for the next quarter or so.
Okay, so those are the levels that you should be watching out for. I hope, Sridevi, that answers your question. But next, moving on to the next query, Sanjay is writing to us from Ahmedabad. He wants to understand whether it's the right time to accumulate more shares of Som Distilleries. Lancelot, let me come to you on something like this counter. Well, there had been a little bit of micro issues with regards to whether PAS was concerned and about the labor laws as well. I just want to get your outlook with regards to the business operations and how the company is doing.
So I think the company has been doing reasonably well, in terms of sales, but profitability has seen a drop. If you look at the last quarter, the operating profit dropped by almost 10%, and we've seen some amount of reduction in the profitability. Given that things are also becoming a little difficult for the sector, I think at this point in time, this looks trading at a little higher multiple. It trades at almost 28 times earnings. So that could be a little expensive for the stock at this point in time.
Okay. All right. So that's the view on Som Distilleries. We've got a next caller from Hyderabad. Sam is calling us. Sam, I love your name. How can we help you today?
Yeah. Hi. Thanks. Good morning.
Good morning. Yeah. What's your question?
Yeah. I bought Wipro shares at the price of 291 rupees.
Okay.
So currently at loss. Shall I sell off or shall I hold for?
And what is the time frame that you have in mind?
Actually, I entered for short term, but because of the loss, I didn't sell, sold it.
Got it. I understand. All right. And what is the short term that you had identified? 1 month, 3 months, what?
3 months.
3 months. Okay. Kush, from that time frame, would you suggest a hold or would you exit?
Alex, typically Wipro is a stock which falls last in the pecking order when it comes to the large cap IT names, at least on my radar, right? So I would suggest a hold, and only reason for that is because the IT sector has started to pick up steam now, and so has Wipro. It's still a laggard, in this space, but the moves that are coming in for the next, 3 months or so could well take it to his buying price, or at least close to his buying price, and then he could consider an exit. As a switch, if he at all intends to make, once he moves out of Wipro in the IT space, would be HCL Tech in the large cap names and Persistent in the mid cap space. So that those would be my preferences. For now, he could continue to hold Wipro. I would suggest a stop loss at the 240 mark, which is a 20-day moving average. If that is broken, the recent rally could fizzle out.
A strong hold is what we are seeing currently for Wipro. So that's the view with regards to the IT space also that we have for you. But the next question now is from Vaisak, and his question is regarding HUDCO. Wants to understand whether it's the right time to buy or continue to hold this counter. Lancelot, let me come to you on something like a HUDCO. What's your view?
So I think HUDCO is going to see improved profitability because interest rates have come off, and we are seeing the cost of funds for HUDCO coming down as well, and maybe with further rate reduction in the December quarter when RBI, that could spur a benefit for the net interest margins of HUDCO. But on the overall, with a little bit of slowdown as far as the government projects are concerned, as compared to the past, the momentum on project allocation, etc., has slowed down. So you could see a bit of tapering of business growth. And having said that, if you are looking at, let's say, investing in the financial services space or in the lending space, then there are options like, where the lending growth is much faster and the interest margins are a lot higher. So companies like, let's say, Bajaj Finance, Cholamandalam Investments, where you are seeing growth in the size of the portfolio as well as maintenance of net interest margins and low NPAs, they will be better options than HUDCO.
Okay, better. Okay, so sorry, which would be better options than HUDCO?
Something like a Bajaj Finance or Cholamandalam Investment.
Yeah, okay, fine. All right. All right. Sai is calling us from Hyderabad. Sai, very good morning to you. How can we help you today?
Yeah, I have ITC.
Okay.
500 shares of ITC. I bought it at a price of 425.
Right.
I want to hold it for 1 more year. Can I?
Okay. So let me get you a technical view. Kush has been stuck in a pretty narrow range. And so therefore the question is, does it break out? And when does it break out? What are the levels on the upside?
So, Alex, it seems like the consolidation, will go on for some time. As you've rightly pointed out, this entire calendar year, the stock's been into a consolidation mode. The good thing is that it didn't break, some of the key support zones. For that matter, in the 400 level has been held on to, maybe a brief slip here and there, but it's been quick to regain that. So from a margin of safety perspective, it's a great stock to hold. Momentum is something that's missing, and that could be for some more time. I would actually look at levels of 410, 415, that zone. Once that is in the clear, then the stock could move higher, perhaps even to his buying price and higher levels. But I don't see a harm in holding, as I said, especially from a margin of safety perspective. For about a year or so, I would suggest a stop loss at the 380 mark. That's a medium-term support zone, or rather a long-term support zone for the stock. As long as that is held, no harm in continuing to hold ITC. It would add more of a, as a support or as a safety in your portfolio rather than an alpha.
Okay, so a hold is what we are seeing for ITC currently. Well, that's the view coming from Kush. But moving on to the next query, Rajesh is writing to us from Kerala, and his query is regarding Jindal Saw. He has about 1,400 shares at an average price of around 181. Wants to understand whether to continue to hold it for a long term or take an exit in this particular counter. Lancelot, let me come to you on this one. What's your view with regards to this?
Term business of these saw pipes has been is very strong, and one should continue to hold it for the longer term. If you look at its past results, the past couple of quarters, you have seen reasonably good results in terms of growth as far as its profit and EBITDA is concerned. There have been some concerns as far as the revenues growth was concerned. But I think over the period of time, as we are seeing a turnaround in that space, you should continue to see reasonable growth on this stock.
Okay, so that's what Jindal saw is what we are looking at. But next we have Narayana who's calling to us from Hyderabad. Hi Narayana, how can we help you today?
Hello, madam.
Hello, please go on. Please state your query.
I bought AWL, Adani Wilbur, at the rate of 413, 753 shares.
Right.
Can I exit or can I average the shares?
Okay, just want to understand your horizon period.
Hello.
Yeah, I just want to understand your overall investment period. Is it a short-term perspective that you have or a long-term?
Up to 1 year.
Up to 1 year. Okay, in that case, let me go across to Lancelot. Lancelot, your view on AW Agri?
So I think it's expensively traded at this point in time. So it trades almost 40 times its forward earnings, and you have seen that this stock has, even from a results perspective, the results were relatively flat this quarter, and profits were down by almost 30-35%. So maybe one should look at exiting.
Exit is the view on AWL Agri. Unfortunately, there's a considerable loss, Narayana, but that's how it goes. We've got a question from Manjunath who's asking about Oil India, and he's bought at a price of 595, I believe. Can we pull that up? Not Bajaj Housing, actually. Okay, so the question is on Oil India. He's bought at levels of 595. The stock is at 418. Should he hold or exit is a question. Kush, on the charts, what's the view?
Yeah, not so encouraging. Consolidation with a negative bias, medium-term trend also fairly negative. I would suggest an exit on this one. Does it break out or does it give any kind of a big upswing in the coming days? Seems a little unlikely with the kind of volumes that you've seen on the downside in the last couple of sessions also. So Oil India at the current juncture, exit.
Okay, exit is the view on Oil India. Sudhir is calling us from Bengaluru. Sudhir, very good morning to you. How can we help you today?
Good morning, Alex.
Good morning.
So I'm holding VRL Logistics shares of 100 units at a price of 287.
Okay.
The time horizon was 5 years. So I just want to know the expert's view on that. Should I continue to hold or maybe buy a different share?
Sure. And when did you buy this?
Just 1 month back.
Just a month back. Okay. And okay,
Yeah.
fine. What was the trigger?
287.
No. What was the trigger? Why did you buy it?
Because it's in Karnataka, basically the VRL Logistics is expanding like anything. Like
Sure.
I have seen the growth from past almost 10 years. The company has been expanding widely. So with a time horizon of more than 5 years, I thought the share price will definitely become more.
Okay, understood. Lancelot, so you've heard the reasoning. Does that hold according to you? And valuations, are they okay? Would you add more at the current level?
So it's, the current level of stock trades at about 25 times earnings, but the quarterly numbers have been relatively better. We've seen an improvement in the profit margin as well as in the EBITDA. EBITDA is up almost 17% in this quarter. And also the management outlook is that as the economy begins to revive and domestic consumption picks up, the demand scenario for freight, etc., will improve. So given that background, it may be an option to look at averaging it, because the downside is limited since it's trading at a fairly reasonable multiple.
Understood. All right. So that's a view on VRL Lodge. So just to confirm, you're saying hold on, right?
Yes. Hold on.
Okay. All right. The next question is an interesting one. Satyan is asking this, right? He's holding Castrol at a price of 210 rupees. And he's asking whether it makes sense to switch to a Nalco. He hasn't made money on this trade in Castrol, even though he's held for more than a year. He wants to get a return of about 20 to 25% over the course of the next 12 months. So despite the fact that it's a good fundamental buy according to Lancelot, I want to get a check from Kush on the charts. Is it better to switch to a Nalco considering the kind of run-up you've seen in metal counters, or would you say that most of the rally is already done in a Nalco?
Alex, on a lighter note, I think this is a question between him choosing, no volatility versus very high volatility, right? Castrol's not gone anywhere for some time, and I did hear, Lancelot speak about how fundamentally this makes sense. From a technical standpoint, at least there's base formation, yes, but there is not enough in terms of an upside trigger, yet 20-day moving average resistance still kick in. So I would suggest an exit from Castrol purely from a short-term perspective, yes. Does he enter Nalco? Yes, for that also, because the stocks had a good run, had its share of volatility, but it's rebounded from the 20-day moving average. And the medium to the long-term trajectory for Nalco is still intact and upwards. So my suggestion would be it's not a bad idea to switch, just that, we know metal counters have been volatile and you might want to factor in for that. So keep a deepish stop loss, a tight risk management system, but a switch, is warranted. Positional stop loss for Nalco is at the 245 zone. So keep a tight one at that. But yes, you could make that switch.
Okay, interesting view with regards to what's happening with Castrol and whether Nalco is a better switch or not. But moving on, next we have Vijay who's calling us from Hyderabad. Hi Vijay, how can we help you?
I'm holding KRN heat exchanger, 100 shares.
Please go on.
At buy price 890.
Okay.
I want both technical and fundamental on this.
Okay. Lancelot, let me come to you on this one. So if you just check the listing of this particular counter, it's seen about an 80% of an uptick. And this is majorly on the back of the capacity expansion that they're doing. 6x is the kind of levels that we are looking at, which should be operational from April onwards. Just want to get your view with regards to KRN heat at the current levels. Is it still an attractive buy?
So I think all the future gains of the capacity expansion have already got priced into the stock, because we will see the expansion actually kick in from April onwards, but the stock is already trading at 85 times its earnings. So it's already factored this 6x benefits that it will get. So given that, I think at this point in time it's already a little bit overpriced. So one should not really enter at this point in time.
All right, don't enter at this current price. But if you're holding at elevated levels, would you take money off the table? 890 is the buy price. 822 is the current market price.
No, if you are in a loss and you want to wait for a shorter term, then one can look at it. But otherwise, one should exit, because I'm sure when the things settle down, you could probably get the stocks at a much lower value.
I'm going to make an exception because this is an important question to take. Should you take money off the table on the technicals as well? Kush, quick view.
No, Alex, I'd continue to hold. There is a very short-term, near-term rising trendline support. So I would continue to hold, but I would hold it with the stop loss at 800.
NTPC is the name of the counter next that we're taking. Tejal is asking, she's writing in from Pune. Bought at levels of 415 rupees, 100 shares held. Should you hold or sell is the question. Kush, what's the view on the charts? Incurring a loss right now?
Sell.
Sell. All right. All right. I think we have time for one more. Keynes Technology, long-term perspective is being sought. 6,530 rather is the buy price. Suresh is writing from Kerala. Would you add more at the current levels of book losses? What's the view, Lancelot?
Well, I think it's a lot is dependent on, very far out in the future, how things pan out. So I would not take that call at this point in time. It's better to just book losses and exit.
Okay. All right. On that note, it is time to hit the rapid fire round, and a quick reminder to our experts to keep it as short as possible. GM Breweries is the name of the counter. Nirav is asking this from Ahmedabad. Board levels of 735. Long-term view is being sought. Should it be held? Lancelot?
Yes, you should hold this.
Okay, Pyramid Pharma is stock in focus. Akhil is holding about 200 shares at the price of 150. Wants to understand whether he should continue to hold. Kush, your view?
Book profits.
Magellanic Cloud is the name of the counter. TM wants to know whether to enter at this current level. What's the view, Kush, on the charts?
No. Wait up. The stock seeing selling pressure. Don't enter now.
Okay, Canna Robeco is the stock in focus. Now the viewer, Advait, has bought about 56 shares at a price of 266. Wants to understand whether to book profits. Lancelot, your view?
If it's a longer term view, definitely one can book profits and then wait for a lower price.
Okay, Steel Strips Wheels. Siddharth wants to know whether to hold if he's bought at levels of 231 rupees per share. What's the view, Kush?
Continue to hold, but keep a tight stop loss at the 180 mark.
Okay, Vikram has bought shares of Grasim at the levels of 2770. The stock is currently at a loss. Wants to understand whether to hold or sell. Because your view?
Yeah, not too far from buying price. Continue to hold. Stop loss at 2635.
Piramal Pharma is done? No. Okay, done. Star Health Allied Insurance, bought at levels of 900 rupees. We've got a question from Pune. Should you hold or exit at the current price? Lancelot, what's the view?
I think one should exit at the current price.
Okay, Rita wants to know that she spots Senco Gold at the levels of 340. Wants to understand whether she can hold for the next 5 to 6 months. Kush, your view?
No, I'd suggest exit on Senco.
Narana Health, would you buy for a period of 18 months? What's the view, Lancelot, on the fundamentals?
I would buy.
Would buy, all right. Well, that brings us to the end of this edition of Ask Profit. We couldn't hit that 60 mark, but we came close to 50. We came close to 50. I think we did pretty well. Gentlemen, thanks so much for taking the time, and pleasure speaking with you as always. Viewers, there you go. We really did try to make a break for it at the end, but unfortunately we stopped short of that 50 mark, and it seems that's the case for the market as well. It stopped short at that record high levels. The question is, where do we end the day? Thanks so much for tuning in from Anushi and myself and the team that put this show together. Thanks, and this is NDTV Profit.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है और रहमान
सोनू निगम के लिए जोरदार तालियां।
The NDTV profit has come a long way since it was relaunched.
I hope you're
Hello and welcome to KYC. I am Sharad Dubey and the company on KYC's radar today is a specialty restaurants. News flows also coming in from this counter and the numbers also in Q2 were largely, you could say, on the mixed side, but there was some positivity as well. Now as we head into the festive season, of course we're expecting that there would be strong demand kicking in. But in this question, why have we got this company? This is a company having a low float, you could say, and the volumes are low, market cap is low. But what is the special thing about this which all the investors want to know? This is what's the rationale for the new development of a leasehold land in West Bengal. When I speak about specialty restaurants, it's a restaurant related business. Then why this announcement is coming in? That is something which we will be asking. Second question on our radar in KYC would be, why has the SSG guidance been raised? Of course, the third quarter and fourth quarter are expected to be stronger in the restaurant industry, and that's by definition it comes. The third question we'll be asking is, what's the share of dine-in versus delivery? Is delivery also gathering pace? Are people ordering good food from their brands also directly to their homes? That's something we'll be watching out for. Operationally, the margins guidance ahead, that is very important. There was a good operational margin uptick in the second quarter, but will that sustain? And also the fifth question is the restaurant opening and capex targets in next 12 months. It seems like the company wants to expand very fast, and when the expansion kicks in, of course the financials also do take a hit, but yes, the revenue potential goes up. So these are the key reasons actually about this company, and this is in the business of operating restaurants and outlets, and sweet shops are also there. And I'll tell you the brand also, which is very much important, especially in the Western India. They operate in fine dining as well as the casual dining space, resto bar, cloud kitchens and confectioneries. You see the entire gamut of services are coming in from specialty restaurants. You must be wondering which are the brands, and we had earlier teased also in social media. This include Mainland China, O Calcutta, Asia Kitchen, Sweet Bengal, that's the confectionery one, and also Global Grill. It's this brand is called Sigri as well. Bizarre Asia, Jungle Safari, Cafe Mezuna and Riyasa. These are the new names which have come up over the last 3 to 4 odd years. Haka episode 1 also come in. These are your household names whenever you travel outside or order in food. So that is why you must be wondering why these companies are coming back again and again. So the company, the main holding company is called Specialty Restaurants. This was incorporated in 1999 and these are the two classic brands. It started from one restaurant in the city of Kolkata. Specialty Restaurant in 2025, see the journey. They have been profitable for consecutive 17 quarters till Q2 FY26. Look at the network. From one restaurant, this has gone up to 123 overall restaurants, confectionaries and franchisees. Of course, most of them are company owned, but some are there on the lease as well. Let's see the outlet synopsis, how actually things pan out. And I was just mentioning earlier, 112 of them are still the owned unit side, but the franchise unit, that's just 11. That means company focuses much more on their ingredients, on their entire setup, processes, everything is seen by the company. And that's why, if you see from a customer point of view, there is a good quality control as well. Dine-in and delivery, that's where the question arises with the management also. Till now, it's a 76% coming in revenue from dine-in, but look at delivery. It has been growing, and over the last 2 to 3 years, the way delivery space has gone up, even for the casual dining food orders which come in. So that's why delivery segment is also becoming important for the company. They recently signed pact with coal mines associated traders also, and you must be wondering why this is happening. This is due to a development of a leasehold land in West Bengal as well. Company has a multiple business areas as well, and maybe there might be some synergies because of their core strength coming in, and this is a large land parcel in West Bengal as well. So these are the key takeaways coming in when you understand where the company is standing. But remember, the market cap is on the lower side and the institutional interest is not so much there in the stock, but we'll decode everything regarding this. But our show has 8 parameters when we judge a company in KYC. I'll list you down all these 8 parameters, and these are very much important. Income statement, balance sheet, cash flow, these are the holy grail of fundamental analysis. We take them first. Then comes the return ratios, what the ROCs and ROEs have meant to the stakeholders. That's one of the best questions to ask. Apart from this, looking at the street cred, valuations and outlook, and of course the shareholding. These are the other parameters we'll be judging. There will be roughly 8 parameters, and then the KYC rating would come. So let's move on. Income statement, the first and the most important numbers looking at them. The revenue, there has been a significant jump if you compare that with FY24 and FY25. EBITDA has been largely flattish, not much to look at, but margins, will it come back to the 20%? Or of course there were some adjustments coming in, because when a company starts expanding, their margins do take a hit. So that is something which we will ask the management as well. Our net profit, if you compare to FY23, it's still on the muted levels. Interestingly, let's pull out the Q2 numbers and see what has actually happened, because I'm getting a very mixed kind of a signal from this analysis. Nothing much actually, but look at the revenues year-on-year basis. The revenue EBITDA, that has done well in the Q2 numbers, and the margins, a slight uptick also coming in, and net profit also a jump coming in. So year-on-year basis, the way the restaurant business pans out, that is still strong, and the margin trajectory, nothing to look at much. There was an aberration, 20.5%, but it has remained constant over the last 5 to 6 years. Whether this is good for the industry or bad, that is something we'll ask the management, but nothing much happening, 17.5% in the overall setup. But net, the margin trajectory seems stable. So largely, I would be giving a neutral rating when it comes to the income statement. Nothing very out of the box and nothing really bad as well. So that is the first rating where we come in. Second rating is the balance sheet. What happens in the balance sheet? The equity numbers, they are largely decent enough. Borrowings, they have spiked up, and this is a reason because of the expansion which the company wants to do in the next 12 odd months. Cash bank balance, nothing much to look at, because it's a very working capital intensive business when you are entering the restaurant space. So only a couple of parameters, something I'll be judging the company on, and for that I'll again give a neutral rating for the balance sheet. Cash flow, third one, but it's very important, especially in the restaurant business. Catering is also involved in this. Operating cash flow is decent, jump 73 odd crore rupees, and the cash flow to PAT conversion, that has also been decent. The net cash flows, these are very smaller numbers to look at, but net, I would still give a neutral rating. So nothing bad has happened, nothing great also has happened. Now the first 3 ratings which I have given you, but the return ratio, that's where the performance starts coming down for the stock. I was just seeing the numbers which we had got. FY23 seems like a watershed year when it comes to the returns. After that, single digit numbers, FY24, FY25, and ROCs, when you enter a stock, you should get something above 15% to 20%, then it makes sense. So that is where the company is lacking. That these are the ROC numbers on your screen, and also the ROE numbers. That has been a problem and cause of concern, and that concern of course is reflected in the share price also. So from my side, I will be giving a thumbs down in this parameter. 4 parameters done, we move on to the 5th parameter. That is the shareholding parameter, and shareholding pattern, just look at the screen, it looks like a flat line, nothing much happening. Promoters having the stake of 50 odd %, but almost minimal exposure when it comes to the institutions. FIs, a very limited 0.2%, it went to 0.5%, so this doesn't move the needle. DIs also, actually they have been decreasing their stock, but it was a very small proportion as well. So the stock has not caught attention of the institutions as well, and a majority of them are in the retail space, the public space. So that also becomes a concern, because if institutional participation doesn't come in, that means major corporate actions or even demand supply might be impacted, and that is why you see the stock always remains in a very small range. There's never a big spike or a big loss. It's in a very small range, and it's been a long-term chart. So net for this, I will be giving you a neutral impact rating. Street cred would be our next one. Nothing much to the shareholders. Last 1 month, it's down 10%. 6 months, nothing happening. It's down 5%. Year to date, down 12%. As I was saying you, the company has not rewarded the medium-term shareholder investors. But 5-year basis, yes, it has been a multi-bagger, 222%. So both sides, confliction views come in. So I'll be giving you, I'll be giving the company a neutral rating. Also looking at the valuations, the trailing 12-month P, that stands at roughly 29 times. And just to put in perspective, the QSRs, they are on the higher side. That range is between 30 to 50 plus. That's on a blended basis. So net, it is cheaper compared to its peer, but it's not commanding the valuations because of the reasons which I pointed out, especially the lower return ratios. And that is why the market has given it muted valuations, and that's coming in at 29 times. So it's a neutral coming in from there as well. But outlook is something which is very upbeat, and that caught my eyes as well. After a lot of quarters, some forward-looking good statements started coming from company, and I read that the most important thing is management has lifted the SSSG growth from 2.5% to 5%. That means they are coming back. And this is of course the industry impact, also the competition coming in, but now they want to say that yes, we are expanding. What are the new formats? They are targeting 2,500 to 2,700 square foot area, and the capex, that would be roughly 6 to 7 crore annual revenue per store. So numbers are starting to come in, and when the company starts quantifying their guidance, that is where they become sure if they can achieve it or not. So technically, when you study these guidelines, this seems like the company knows their numbers. Also, the company is planning to open 8 to 10 restaurants in the next 12 months. Which category would it be, under which brand, which new geographies? That's something we'll be watching out for. And of course, company has some exposure in the Dubai markets as well as London markets of signature Indian restaurants as there as well, but nothing much major contributor when it comes to the overall revenues. But let's rate the company. Let's rate what's special in specialty restaurants, or is it? First and foremost are the financial numbers. Nothing much happening for the company, and that is why I've given all the first 3 parameters just a neutral rating. Return ratios, that has taken a lot of toll on the long-term investors, so it's a negative for that. Shareholding, street cred, and even valuations, not much happening here. Valuations are still cheaper than the QSR players, but street cred, only the long-term investor has got good returns. Apart from that, investors' patience has been tested. And outlook, however, I'm very bullish on it because of the growth aspect. So net, I've given 4 out of 8 when it comes to the overall KYC ratings. And historically, these are the numbers on the lower side when we give a company in our show. So this is what the entire picture for specialty restaurants. But to get in us more pictures and to add more spice and flavor to this conversation in our show, they have posted a steady quarter, the company, and with the EBITDA up over 5% and the margins, they are largely stable. Profit growth, however, has remained muted. But my colleague Mahima spoke to Anjan Chatterjee, and he's the chairman and managing director at Specialty Restaurants, and they spoke about the important developments. Have a look.
What is the strategic intent behind signing this pact with Coal Mines Association traders? What is the idea behind the whole acquisition?
See, this is not an acquisition. Government of West Bengal had given us a space to develop a catering college and a commercial complex for our own retail consumption. And on the basis of that, we've been trying to talk to a lot of people in the sense in our joint venture, like we've done it earlier in Salt Lake, and we've also done it in Rajarhat. So we actually started talking to many people, and eventually we saw a lot of synergy between us and coal mine associates. And based on that, we have developed a joint venture wherein they will put all the money and develop the whole plot on a commercial basis, and we will have a part which will come as a real estate to us as retail and space where we can do restaurants and banqueting. So there's no expenditure that we have to do. Based on the land that we have a joint venture and we get a portion of the retail space created.
Understood. So then how is the revenue sharing model going to be like?
So specifically, we are working on the details of how much real estate will come out of that. The calculations have been outlined, but we would say that we would get in and around because this land is been lying for a long time because there were not too many takers in the city like Durgapur. But now Durgapur is actually coming up. It's a place where a lot of commercial developments have been happening. So hence the part that we will get will be on banqueting, either a ground on the first floor, and we will do all our restaurants. We had done a restaurant long ago in Durgapur, which was earlier than we should have gone there. Now we are planning to do a kind of a haka. We are going to be doing another Walters, the burger, and maybe not just a fine dining, we'll do a casual fine.
Understood. So you said the investment part is going to be handled by Coal Mines Association right now.
Yes.
In terms of the timeline, though the investment is from their side, what is the timeline looking like post investment development, and when does this kick start?
It is dependent on the regularity or authorities. The authorities have to give us permission to do that. The drawings have to come, and it takes a little time. So we are looking at in and around 3 years. By the time it will be fully ready for occupation.
Okay. And what is the ratio of JV? How is that being determined, or those details are still pending to be penciled out?
Yeah, there are some discussions which have gone in. So because to fix it, nail it, we are in the process of doing that.
Okay. And since I understand that there's no capital going to be involved, this is not going to impact your overall return on capital. But in terms of margins, is it going to be any different from what you're doing right now? How does this impact your financials?
See, I'll tell you very honestly, when you have your own real estate, because there's a huge real estate play here, and as you know, real estate continues to be around 15 to 20% of the total expenditure that we do in any store matrix. So when you have your own places, your own area, you're not paying for the real estate in the form of a rent. So that actually completely changes the scenario of a store matrix. So whichever we do, that it's a self-created and rented place, which is internal rental, which is not to be actually given to any outsource. So that much of margin becomes better.
Mr. Chatterjee, with regards to how Q2 has fared, the same-store sales growth was positive this quarter. The guidance that you've given is that it should be anywhere between 2.5 to 5% Do you think that is possible in FY26? By the end of FY26, do you think that 5% SSG is possible for you?
As you know, I'm not supposed to give you any projections, but the way things are going, I think that, our stores are maturing, SSG is better. I can also say this to you because OND being the best quarter, we are seeing a lot of traction, we are seeing a lot of tailwind. And you have the best October, November, December, as you know, historically has been the best. And I think that we are looking at a kind of a margin in and around that.
Mr. Chatterjee, the other aspect is a lot of companies that run these QSRs. The trend that I've seen is that because online sales for them is picking up, they are adding restaurants. It's not like they're not adding outlets, but for them, square feet is being reduced, and that's something that you're also following. So for you, that revenue per square feet metric will go up since your square feet is coming down. How are you viewing that metric, first thing? And secondly, in terms of the overall target with regards to where the revenue per square feet stands, what is that target looking like?
See, I am saying that there's not been... One thing I can tell you that we have learned over a period of time that restaurants have to be compressed. They have to be less in space because that's very expensive. So what we are also doing that within the kitchen, as you know, during pandemic, we learned a lot. We were not a delivery oriented company. We were more in dine-in company. So this particular thing, the growth of the kitchen actually being utilized for more than one brand has given us a huge leverage. This leverage is being used in every planning, and all restaurants that we are doing, for example, we're doing one in Delhi. So Oriental space is the one which we want to dominate. So from a mainland China, then you have the Hakka, then you have Gong. So this is where we are going to be growing. So within that, like in a place like mainland China, we have a Hakka. We also have a Gong. We have an Asia Kitchen in the mainland China's that we are building on. Within Asia Kitchen, we also have a mainland China and Hakka. So because the cuisine is absolutely same, the number of people who are working are already engaged. There is no real estate cost. So these are the ones which are futuristically going to change a lot of margin. There's going to be a place. The only thing we are paying is the commission and the food cost. So I think that going forward, there will be a lot of traction on profitability from this end.
Understood, and that makes complete sense, right? And just to put that point into perspective, right now your dine-in is around 75% and your delivery is around 25%. Over a period of time, let's say 3 years down the line, how do you see this mix evolving? Because even that is going to impact your margins in a positive way.
Yeah, so I'll tell you what, going forward, see, we were almost 1 or 2% pre-pandemic because everybody used to come there and take away. Takeaway was the only thing, and we were just hovering around 2-3%. We never were understanding that the delivery will actually disrupt. Pandemic did that. So after that, it's become 24% because I think that this will hover around 27 to 30% going forward. The kind of, growth which is happening, the kind of social patterns which are happening. And on my table at home, I will see there are 4 brands which are lying with my children, and they've got one, A from here, B from there, and there's an ensemble of restaurants lying on the table. So that is a new trend. So it'll grow more and more. Distances are becoming difficult because, from one part to the other, especially in a city like Bombay or Delhi now, things are becoming difficult. So people would rather say that, mangwa lo. But, the social, So there's a gathering happening, there's a match happening, people are actually very comfortable getting that. So the mechanism of getting food from outside has also become easier and better. So I think that this will grow.
Yeah, absolutely. This year, FY26, the second half, how many more restaurants are you planning to add? One thing, and what is the kind of capex that you're looking at for this? And overall, the entire capex that you do, will that be via internal accruals, or are you looking to raise some funds or debt? What is the plan like?
See, we are absolutely a debt-free company. I've believed this very, very strongly because I'm a middle-class boy. So I think that you should not go beyond your capacity. Internal accruals continue to be there. We have in and around 160 crores, which is lying in the treasury, and we keep on throwing EBITDA margins growing, or the cash is being thrown in from the business within. So we continue to do that, and internal accruals will fund all our growth. Your question, part A, was to tell you that we will be doing in and around 4 to 5 restaurants. Actually will be operational in the second half now till the 31st of March, because they're all under fit outs, and God willing we should be absolutely ready by 31st March or max 1st April with 4 to 5 restaurants.
All right, interesting. One last question, Mr. Chatterjee. With regards to any new brand onboarding, or you launching a new brand, or acquisition of some new brand, anything on cards?
Acquisition, no. At this point of time, acquisition, no, because, we are the only company, Specialty is the only company, I'm not flaunting this, but have been able to develop brands within. We're the only company over a period of time. I'm talking, there are many others who have followed and done it in casual and fine dining now. I'm very, very happy about that. But we've not borrowed any expertise to build brand from any international company or anything else, but from the mainland China, Asia Kitchen, whether you talk about Cafe Bazuna, Siciliana now, Walters, my son's doing the burger part, or anything like a low Calcutta or a Sweet Bengal, everything is homegrown. So I don't think there's any need for us to look at an acquisition where, people are struggling and we look at the future. We have enough on our plate to develop.
That's an interesting take from Anjanda, that there's enough on the plate. Of course, two questions arises. Is it enough for the investors or is it enough only for the customers? But three important takeaways coming in is the West Bengal plot, which is coming in as a retail space in Durgapur. There is no investment coming from the company side. They will be just making a banquet and some of their brands will be getting introduced in the casual and fine dining space. Q3 generally remains best performing, and in this parlance of restaurants, it's called OND, October, November, December. And the last takeaway is definitely the revenue contribution that's expected to grow going ahead more, especially on the margin front also, because operational efficiency kicks in. They have just a single kitchen and multiple brands can be served. So, of course, management has given a strong outlook going ahead, and Q3 quarter is largely to remain strong over here. So the time will decide whether we see some better numbers coming in the Q3 numbers in the coming 1-2 months or not. But that's all enough for this company, Specialty Restaurants, and thank you very much for tuning in to KYC.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए जोरदार तालियां.
The NDTV profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Blockbuster day on Dalal Street today. Nifty and Sensex rally to a record peak. Nifty took 289 trading sessions to climb to the new record high. Heavyweight Reliance Industries hits a 52-week high today. Finance, media lead the gains. Banks and IT also eke out gains. PSU Bank as well as oil and gas on the back foot. Cabinet approves PLI scheme worth 7,280 crore rupees for manufacturing rare earth magnet to reduce reliance on China. Scheme to have a duration of 7 years, which includes 2 years for setting up the plants. Apple pushes back against India's new antitrust penalty framework, files a petition with the Delhi High Court to challenge the 2024 law that could expose the tech giant to a $38 billion fine. IMF expects India's economic growth rate in FY26 to remain robust, supported by favorable domestic conditions. Real GDP is projected to grow at 6.6% before moderating to 6.2%. Hello and welcome. You've joined us on Markets at 12. I'm Nisha Poddar, and what a record-smashing day it has been for the markets. And across the board, both Sensex and Nifty hitting their all-time highs in the trading session today. Let's take a little more, look at what really transpired in the market. But one absolutely important point to note here is that as soon as Nifty 50 has hit the all-time highs, in the last half an hour or so, there is profit booking, and it is also losing some bit of those gains at a very fast pace. There you go. Take a look at that particular chart. So unable to hold on to that levels, also because the wider participation has not been there when it comes to the contribution. So let's take a look at the contribution chart for Nifty 50. Of course, the financials as well as the banks, and not PSU but private banks, that is the pocket which has aided the contribution the most when it comes to the key indices today. HDFC Bank has been one of the top performers even in yesterday's trade, and today also it has contributed the most. When we talk about sectors, we said Nifty Financials, Nifty Media are really contributing, doing well, but PSU Banking Index, that is the one which is the biggest drag in the overall market. Even Auto, Realty, these are the ones which are not performing well. IT is the one which has been supportive along with banks as well as financials. So keep an eye out on that. One also point of worry for the market is that while the key indices are really hitting their peak levels, the wider or the broader market participation is not there. So when we look at mid-cap space as well as the small-cap index, these two have been underperformers in a day when Nifty as well as Sensex have been hitting the record smashing levels today. So that's the synopsis of the market. Of course, a lot of things really working out for the market. When we look at the global cues, in fact, the US Federal Reserve also expected to cut rates, and our own Indian RBI expected to cut rates. All this is really impacting the market mood and sentiment. Let me welcome on the show Nishal Maheshwari, is a market expert, joining us now with more expert take and perspective on the market momentum. Nishal, always a pleasure to have you on NDTV Profit. Now, my first question, of course, we see the record smashing levels when it comes to the key indices, but the wider participation is not as much. What's your view, and also what are the factors you think are really impacting this momentum?
Hi, afternoon, Nisha. Thanks for having me on the show, and welcome to your viewers also. So I think, first of all, congratulations. After 14 months, we have hit the peak again.
Yes, yes.
So I think congratulations to you, investors, everyone. I think it's been a long wait because if you really see, there's very little issues as far as Indian economy is concerned. I think we were at in a very good state in the last 1 year or 14 months, but still we took that much time to come back here. So what I see here is basically that at this point of time, there is some amount of profit booking. As I was telling you, it's after 14 months. And people who have not seen returns for more than a year, basically, they want to actually, they are not sure that this is a sustainable rise. So I think you will see this kind of profit booking happening. But what is heartening also is this is the second time in the last 10 days that Nifty hit a new high. So it is trying, and I think it's only a matter of time before it breaks out of this.
It breaks out of this. So what is the next level as per your estimates, and how soon are we expecting this? How the basic question now everybody is asking, is there going to be a sustained Santa rally at the end of this year?
I think so, basically. Maybe not this year, but I think very shortly, basically in the next quarter, there is going to be a sustained rally. Now, what we have to look at it is saying basically what is the kind of valuation it can support. That was the reason basically you saw this, that the Indian markets have not performed, where the world markets, emerging markets especially did very well. We were at around 22, 23 times at that point of time. And on top of it, we had only a 3.5% kind of or a 4% kind of earnings growth for FY25. Now, going ahead, given that we are coming from a low base, I think a 12 to 15% kind of earnings growth is likely to happen in 26. Now, on that kind of scenario, you can easily assume that Nifty will definitely outperform this 15% number. So, a 15 to 20% kind of growth next year for Nifty is not really challenging.
Right. So, Nishchal, when you say that 15 to 20% of growth for Nifty 50, what all factors are you really incorporating in it, which will be kickers for the further momentum? Because looks like today's rally is already baking in the RBI's rate cut, some positive direction when it comes to the tariff talks with the US, and also US Federal Reserve also easing the monetary policy. Do you think that all these three have been beautifully baked in the market valuations currently, and the future factors that could be the kickers?
So I think rate cut, yeah, it is expected both in the US as well as India. I think that is definitely baked into the prices. But I think the major one which would drive the market up is the US-India trade deal. I don't think so. It is only an expectation that the market has seen this new high. But what will be the final number? Will it be 25% lower? I don't know. The market is not baking in any of that. And a deal happening also is basically not baked in fully, is what I would say. I wouldn't say that part of it is not baked in. Expectations are very high that the deal is likely to be announced anytime soon. But what will be the contours of that deal? I think that will finally decide where the market is headed. And if it is lower than 25%, because I think if Russian-Ukraine war is also sorted out, I think that 25% first has to go. And if it is a good negotiated deal, then we should be getting lesser than 25. And the lower it is, basically, the bigger the market jump will come through.
Right. We are a lot dependent on how the US trade tariff deal really goes through, and anything below 25% is still going to be a very big positive momentum for the market. But Nishchal, my question, what about the broad market participation? Because even in Nifty 50 components, we have seen only a handful of stocks which have really pushed up the contribution to for Nifty 50 to reach the peak levels. When we look at the mid-cap universe as well as the small-cap universe, it's clearly underperforming in a day when both Nifty and Sensex have hit all-time high. So what about the broader participation in the market, Nishchal?
I think the broader participation is sometime off, actually. The first thing is going to happen is going to be the large caps, basically, because they are the cheapest in the market, and more money will start coming back into the large cap, because large caps earnings are much more stable, visibility is much higher, and they are cheaper also. So that's why I think the first money is going to come in. And even the FIs come back, they would be looking to buy the large caps only, because that's where the liquidity is. Now, mid caps and small caps have their own challenges. Historically, we have seen basically that in a easing liquidity scenario, especially mid caps and small caps tend to do better. Now, what we have seen is that the transmission of this interest rate cut of 100 basis point is still not happened. So that's why we are seeing that the liquidity is not very easy. So subsequent rate cuts basically in the economy and the easing of liquidity will definitely help them. But I see at least a 3 to 6 month a time frame before the broader market starts participating.
Right.
And the valuations definitely are much more challenging as far as mid cap and small caps are concerned.
Right. So the two very important points you made, Nishchal. One, of course, is that obviously even if the liquidity injection is given by the RBI and even by US Fed, it will take 3 to 6 months for the markets or the companies to start benefiting from it. But given the fact that our earnings was much better than the expectation, what are the other factors that could really be a challenge going forward on your radar? Because we've had some very good news coming in right now. Any factors on your radar which could add to the challenge in the market and contrary to what we are expecting right now of the gains of Nifty 50 going forward in 6 to 12 months?
So it should be surprising, but low inflation has become a challenge for India. Now, this is, I couldn't have imagined this, but it has happened actually. And now the real GDP is 7.5, and nominal GDP is only 8.5, and that is impacting the earnings growth. Now, in a growing economy like India, a 4 to 5% inflation is really not really worrisome. And I think too much focus on the inflation side, I think it has caused this issue. But I think government had this foresight, and that's why they have cut the cut taxes first, thereafter cut the GST. They realized that this is going to come up sometime, and but then this has already hit us. So we have to go back to a 10% plus kind of a nominal GDP growth for the earnings to come back again.
Yes.
So now that is my worry. If this low inflation still continues for a quarter or two, at least for the next quarter, it seems that it's going to be low inflation only. But then the base will start kicking in, and on the first quarter of financial year 26, financial year 27, basically, you should be okay.
Right. So, Nishchal, very important point again, that lower inflation, is it a cheer or a fear? We have to go forward and see and how it really impacts the overall economy. But one last question, any sectors you see as underperformers or outperformers going forward? Any outlook on the sector specific?
So sectors, I think it's more or less consensus basically. Financial should do well. They have not performed, and then the interest rate cut scenario definitely is going to help them. So I think financials is one which has already performed also. Maybe this could be a good time to start accumulating IT, but you have to keep in cognizance that the performance, the numbers are not going to still come in for at least a couple of quarters more. But given that the stocks are underperformed, they are cheap, so one should become equivalent weight on IT. I think consumers have already done their part. So you should be cutting your weightage on consumers to a sort of a neutral now. Energy is one thing basically which I think should have a good time. So energy should be now overweight in the portfolio. Metals, energy. So I think that's where it looks like interesting.
All right, Nishal Maheshwari, very, very valuable insights on the markets on such a momentous and a historic day for markets. Thank you so much for joining us with all your insights. Thank you. All right, and staying with the markets, our colleague Sharad joins in to give the insights on the journey to the all-time high that the market has seen. Sharad, tell us.
Interestingly, it's almost a 14-month journey coming in from the last time when Nifty hit its lifetime high levels. It took 289 trading sessions. But the stocks which contributed the most in terms of index contribution, this included Bharti Airtel, ICICI Bank and even Reliance. At 52-week high, the divergence starts. Only 3% of stocks in the Nifty 500 have hit their all-time high levels. And interestingly, the 52-week high names, they are flashing on your screen. They include MCX, Shriram Finance, PTC, Hero MotoCorp, AU Small Finance Bank, Max Financial. But the broader indices are still lagging. Nifty Mid Cap 150 is almost flat. They just gained 0.4% since last time Nifty hit its lifetime high levels. But there are some exceptions. They include BSC, Wari Energies, G, Barnova and even Muthoot Finance. Nifty Small Cap, much more underperformance coming in. It's down 8.5%. Since the last time we hit the record high levels. Small cap gainers, however, are there. They include Force Motors, Ather Energy, Laurus Labs as well. Nifty gainers, big names, Eicher Motors, Bharat Electronics, Bajaj Finance. And Nifty gainers, interestingly, Eicher Motors, one of the pick of the stock I have taken. They have gained nearly 43% from the previous record high levels we saw. Nifty gainers includes Canara Bank, Federal Bank, AU Small Finance Bank. These are largely the financials. They have been a backbone in Nifty's rally. And the sectoral gain, Nifty PSU Bank index comes in, and that has shown a 24% growth in this Nifty rally. And there are big names. This includes Indian Bank, Bank of India as well. But to mention some laggards also, they include, since the last high, they are Trent, Tata Motors PV, Bajaj Auto, TCS and even Coal India. Looking at the gains from 52-week moves, who has actually gained the most? This includes, of course, the electrical companies, M&M and Eternal gaining the most. Bharat Electronics gained roughly 50%, but Trent, NTPC and Power Grid, regulated business largely, they have fallen the most. But the journey, though it has taken a lot of time, is very fulfilling.
Right, Sharad, what an interesting data that you have presented, and already looking forward to 27,000 levels path to that. All right, but we are not done with markets because the euphoria that we have seen on Nifty and Sensex is really very infectious, and a lot of stocks are really buzzing around, gaining 8 to 15% in trade. Our colleague Jasmeet is right here with the whole list of counters which are really heavy hitters in trade today. Jasmeet, tell us.
All right, thank you for that. Starting off the three newsmakers which are buzzing in trade today. Starting off with the first, Patel Engineering. Well, the stock is buzzing in trade and it's nearly up 10%. This is on the back of letter of intent that the company got for the Southeastern Coalfield project. Well, this particular project is for rupees 800 odd crore and is to be completed in next 9 years. Well, this project is for the execution of excavation as well as transportation of coal to the Chandigarh district. Well, all in all, we see the stock buzzing in trade today on the same news. The second counter in my list is Ganesh Housing. Well, the stock is buzzing on the back of the volumes. If you look at the current volumes, that 150 times on 20-day average. If you look at the stock performance, stock recently touched 52-week low performance and now it's again ramping up and is buzzing in trade today. Well, the last counter on my list is buzzing on the back of news, that's GMDC. Well, the stock is nearly up 63 odd percentage on a yearly basis. Well, this buzz on the back of the stock comes when the Cabinet Union approves the budget for the rare earth magnets of roughly 7,200 odd crores, creating all the momentum for the company, given the company is into the production of rare earth magnets. These are the three stocks buzzing on the back of volumes and news in trade today.
All right, Jasmeet, many thanks for joining us with those lists of heavy hitters in the trade today. All right, a lot about the market, but there is one very important story that we are tracking right here in NDTV Profit. Now, Apple has taken Competition Commission of India to High Court, challenging the new rules that allow penalties based on a company's global turnover. To talk more about this and its implications, remember we are talking about a large MNC with huge presence in the country while our US trade talks are really going forward and a lot of expectations are attached to that. So this is an important matter that is at hand for India. Manu Chaturvedi, who's a High Court lawyer, joins in with all the details. Manu, a pleasure to have you on NDTV Profit. I'm sure you've looked at this particular case very, very closely. What is the contention and the legal technicality that Apple is really contesting against the Competition Commission of India?
Yeah, hi. Good morning, Nisha. Thank you for having me. It's always a pleasure.
All right, so the line is a little scratchy, but we will get Manu Chaturvedi very soon. But what we have been here deliberating on is that there was an amendment that was made by the Competition Commission of India where any penalties because of flouting the rules of the Competition Commission when it comes to antitrust or dominance in the space really needs to be penalized, where the turnover of the global turnover is really taken into account and not just the presence in India. On that particular account, that brings in the higher penalty risk for Apple. And that is the one thing that is getting contested in Delhi High Court by Apple. Now, remember that this particular case and the solution to it and the precedents will have an impact on all the big IT companies that are really present in India as they go along with the CCI rules. All right, moving on then, while inaugurating the Sky Roots Infinity Campus, Prime Minister Narendra Modi made a big announcement saying that the government is now looking to open up the nuclear sector to private players for the first time. Listen in.
रिफॉर्म्स का हमारा दायरा भी लगातार बढ़ रहा है. जैसे हमने स्पेस इनोवेशन को प्राइवेट सेक्टर के लिए ओपन किया, वैसे ही हम एक बहुत महत्वपूर्ण सेक्टर में भी कदम उठाने जा रहे हैं. हम न्यूक्लियर सेक्टर को भी ओपन करने की तरफ आगे बढ़ रहे हैं. इस सेक्टर में भी हम प्राइवेट सेक्टर की सशक्त भूमिका की नींव रखने जा रहे हैं. इससे स्मॉल मॉड्यूलर रिएक्टर, एडवांस रिएक्टर्स और न्यूक्लियर इनोवेशन में अवसर बनेंगे. यह रिफॉर्म हमारी एनर्जी सिक्योरिटी और टेक्नोलॉजिकल लीडरशिप को नई शक्ति देगा.
All right, we were talking about the big story we are tracking here. Apple has taken Competition Commission of India to High Court. Manu Chaturvedi, who's a High Court lawyer, joins us now for putting perspective into this matter. Manu, what is the contention all about? What is it that Apple is really contesting?
Yes, hi Nisha, happy to be here. I hope I'm audible this time. Basically, we have to go back to 2021 to find the trigger for this petition. So Apple, much like Alphabet, much like Meta, has been under investigation for various anti-competitive practices in these multi-sided digital markets. So Apple and Alphabet have been under investigation for a while regarding their billing system. Now, we're not going to get into the facts of what they're under investigation exactly for, but what happened was investigation was ordered in 2021 and investigation was concluded sometime last year. And thereafter, Apple was basically told by the Competition Commission of India to file its financial statements for a number of years, as well as a reply to the DG's investigation report. Now, this seems to have been the trigger for this petition. When this financial information was sought from Apple by the Competition Commission, one of the apprehensions of Apple seems to be that under the new turnover regulations and the new penalty regulations that have been put in place by the Competition Commission in March of last year, 2024, instead of basing any penalty that they might impose for any potential violations that the Commission might find against Apple, instead of basing this penalty only on the relevant turnover, which would be the turnover that Apple derives, let's say, from India through sale of products and services in that market vertical where Competition Commission has found violations, instead of basing it on that vertical of turnover, that section of turnover, the new regulations actually allow the Competition Commission of India to impose penalties on the global turnover of Apple from all its products and services. And therefore, you're seeing in the media what's being reported is that since Apple is about somewhere between 380 to 400 billion dollars of turnover
Manu, very
annually.
quickly, of course, adding the global turnover escalates makes the amount of penalty much larger. Larger implication and also impact on the overall sector of this precedence of this case. Very quickly.
Correct. Oh, absolutely. So, I mean, basically, Apple is leading this litigation perhaps on behalf of or to the benefit of various big tech companies. So all the Magnificent Seven, the FANG companies, which are under investigation today by the Competition Commission of India, where orders will come out tomorrow, whether they're in violation or not. And if they are found to be in violation, of course, there'll be a penalty that will have to be determined. This penalty now, as things today stand, will be determined on the basis of the global turnover. So what Apple has done is they filed a petition before the High Court challenging the fact or challenging these amendments and challenging the CCI's power to basically levy penalty on the basis of the global turnover and not the relevant turnover. And what Apple argues very briefly is that this amendment that took place last year and the monetary penalty regulations that were introduced alongside the amendment are basically are contrary to and override the Supreme Court's view taken in Excel Crop in this other case in 2017, where the Supreme Court had clarified that you cannot impose penalty on the basis of global turnover or the average turnover of an enterprise. What you have to base it on.
So Manu, they have a strong case here and the implications could be very large and wide. And the precedence of this particular case is going to be very closely watched out for, especially when US and India are engaged in the tariff trade talk as well. Thank you so much for all your insights. Completely out of time on Markets at 12. Thanks so much for tuning in.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
अरे और रहमान सोनू निगम के लिए जोरदार तालियां.
The NDTV profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब
Yes, we have hit record high. Okay, right for the Indian market.
It's not every day that there's a party at work, and that too soon after markets open. This was fun. Neeraj, interesting show today, just to take a pause and understand what really has happened in the markets, because you and I have both seen all-time highs being hit several times. This time feels different, isn't it?
It does, right? I think it also goes to show with what you were saying in the morning, Tamanna. It's been a trudge, it's been labored. It's seen a lot of pain into individual portfolios. It's tested the patience of so many people who have seen the cycle being one way from March 2020 lows, right? And then suddenly this whole 14-month period of underperformance when the rest of the world was rejoicing. So yeah, it's been a different one. The question though is, what's next?
Yeah, and I think the question also is, how long will this sustain? Not that we're expecting that you'll go only one way. Markets don't function that way, and you've seen that this morning. But you know, here are some of the things that we want to keep in mind for you as we talk to a spectacular lineup of guests. And one is that this all-time high has come after a hard-fought battle. 289 sessions, 14 months till we got to this all-time high, and that's not easy. It's come at a time when India has faced tariff threats. It's faced FIIs fleeing. Both of these things taking place in the Indian markets. In fact, think of it this way: we are one of the few nations who don't have a trade deal. That was a factor for a lot of countries when they did have that trade deal, and which is why you saw those markets really zooming. We didn't have that. This has happened without them. So then, who really is responsible? Which is why I'm saying it's happening when tariff attacks have taken place, FIs are fleeing. It's the domestic investor that has fueled the rally. It's your SIPs, it's your investments into IPOs, it's that faith in the India story that has fueled the rally, which is why it becomes so special. India Inc. also finally showed up to the party with good results after 5 quarters of dismal performance. So that has really done the trick. And meanwhile, look at it, global factors, impending deals, impending US deal, and the reform push will keep the momentum alive. Just a second, Neeraj, to talk about that. The fact is that this has also come with a benign RBI, an RBI who is willing to take into account that inflation is low and we need that growth push, and a government which is not shying away from reforms. We had a rare magnet crisis a few months ago. There is a policy today.
Yeah, most certainly, and which is why I think there are multiple potential triggers ahead for the markets. We've hit here. What's next, right? That's the key thing. So the Q2 numbers have set the base for an earnings revival in Q3 at the very least, and that will be a testament to what happens going ahead. The GST cut impact, lower interest rates may lead to a consumption spurt-based earnings upsides. A lot of people talking about the consumption names being the drivers of earnings for Q3. Remember, it also has impact for lenders. So that's the other piece, right, that you got to think of it. A potential trade truce will aid to the positive sentiment that we have currently. And, if there is an AI valuation deflation, that essentially augurs well for India. Everybody talks about India being the classic anti-AI trade. There's a reason there, because it will come off. When it comes off, it probably feeds in to the Indian positivity. Well, so that's the short from me and Tamanna. Now let's take it to our guests and start off with the first one. What is it that charts are saying after we hit all-time highs? Gautam Shah, founder of Goldilocks Global Research, joins in right now on the show. Gautam, thanks so much for taking the time out for this quick interaction. What's next after all-time highs?
Neeraj, good afternoon. I haven't seen a market top without celebration. And I think we've oscillated between greed and fear in the last few days. Just a couple of days back, there was so much fear at 26,000 that amazed me. And now with this move of the last couple of trading sessions, the market has really got stronger sentimentally. I guess fundamentally it was always strong. And technically, I think it has been doing all the right things, making a series of higher tops and higher bottoms. So I do believe that the doors have opened for much greater upside. The market needed to get past this hump of 26,200. And once that gets confirmed on a closing basis, you are probably going to see another 500, 700 points upside. The charts are very well placed. I think between now and say the end of the year, the market is likely to head significantly higher, and more sectors, more and more stocks are likely to participate. US markets also went through a bit of a dip. They seem to be stabilizing, and if that is the case, Indian markets can come back. So all in all, I think it's a good position to be in, and with the sentiment not with the trend, I guess that opens up room for more upside.
Gautam, this morning, and yes, celebrations definitely should always be there in full fervor, but this morning, a couple of notes talking about 30,000. As one says base case, and one says that the chances of 30,000 by December of 2026 now seems likely. What is the number that you have in mind?
Well, Tamanna, I just want to be very realistic, because I think Indian market valuations are definitely significantly higher than the world at this point of time. The opportunities are probably better off in many other world markets. My working number on the Nifty from a more medium-term perspective is 27,500 that I've maintained all along. And my longer-term working number for the next year is about 28,400. Now, that's about 12-13% away from where we are. And I think these are realistic targets that I want to work with. And it's not going to be about the Nifty, as I've highlighted multiple times. It's going to be about stocks, sectors, themes, pockets. And if you are in those right pockets, led by, say, banking, by metals, led by PSU, autos, is where the real money will be made. So the trend is up, but one should not have exponential expectations in today's market environment.
Okay. Gautam, you highlighted some themes, right? Is it going to be a large cap led rally, or do you reckon while it is stock specific, the broader end of the spectrum may make hay? Because a lot of sectors, Gautam, are not just present in the Nifty 100. A lot of very prominent sectors are present beyond the Nifty 50. So and they are large stocks. So what will drive the larger gains? What are the charts saying?
In the last 10 days, whoever I've spoken to has complained about markets not doing well for their portfolios. Yeah. Because, maximum individual investors are into the mid caps and small caps. And it's just the top 100 that has done well. But I have a completely contrarian view here. I think the large caps over the next few months will take a bit of a backseat in terms of not delivering supernormal returns, and the mid cap and small caps will come back. As we speak, you have the mid cap index closer to 61,000, which is lifetime highs. I'm batting for a 10,000 point move on the mid cap index from current levels. So I'm looking at a 70,000 there. And I'm also expecting the small cap index to move to a level of 20,000, which is about 1,500 points away from where we are right now. So if you have to look at the next 6 to 12 months, I still feel the bigger opportunity is mid caps and small caps.
What would be your top bets or top favorites, Gautam, for a mid-cap mover and a small-cap mover? Or would you stick to some of the large players right now to bring in that kind of a push?
See, I think ETF investing, number one, has become the norm. And I think a lot of individual investors are very comfortable with that concept of just buying a basket. So then you don't have to do too much of stock picking. In fact, if you were in financials, I think that's a space that we have liked. I'm looking at a 10% move on the financials index, the Bank Nifty from here. I do believe that the entire power space will come back. I do believe that the entire infrastructure space will come back. Capital goods is making a comeback. Metals we like. And I also believe that this is a market which is now tilting towards value over growth. In the last couple of years, we gave so much importance to growth. Anything that was a 60, 70, 80 PE was being validated and justified. I think the market has given up on that thesis. And now, as you have noticed, value stocks are doing well. Why is an SBI close to 1,000? And why is it one of the best performing, stocks in the market right now? So I do believe that the next 1 year is about value investing. And therefore, the PSU basket, according to me, is going to be a mega theme for the next 6 to 12 months.
Okay, thank you so much for that, Gautam Shah there. So you are going to hear from a whole lineup of fantastic experts over the next 20 minutes. We kicked it off with Gautam Shah, who's saying that maybe not 30,000, but close enough. You have another 500 to 700 points upside for the Nifty. But Dinshaw Irani joining in now. He's CEO at Helios Capital. Dinshaw, great to speak with you on what is turning out to be an exciting day. And an exciting day also because we've been talking about this for such a long time. This has happened despite a lot of headwinds for the Indian market, isn't it?
Tamanna, first of all, thank you for having me on a show, and thank you for having me on a show on a day when the markets are hitting all-time highs. So anyway, I wish you and your viewers also a very good afternoon now. So anyway, so Tamanna, as I was saying, that the fact was that I think basically everybody was waiting for a trigger in the market. We were all hoping that the tariff trigger would come through, but I think now it's the fundamental trigger which is playing out, which is basically the quarterly numbers. The September, I remember coming on your Diwali show and saying the same thing, that if the September quarter numbers look exciting, then things will turn around for the markets and we won't be too far away from the new highs as such. And that's what happened. I mean, the numbers on the face of it on an aggregate basis, though they show you just 15% growth in earnings for NSE 500, I'm talking about right now. But if you go into the subcomponents, the small cap showed a 37% growth. The mid cap showed a 25% growth and the large cap showed a 10% growth. So it's obvious that it's the last two categories which are really kicking in a big way to get the earnings going. However, having said that, last September was a very weak quarter. So that's why the weak quarter base also is playing out here. But I have no doubt in my mind right now that the way things are panning out in this quarter, December quarter should get you some mid-teens kind of growth going forward. And that's what I think the FIs also want. I mean, domestics have always been believers in India's story, but I think the FIs need a push, and that may be just the push that they're looking for.
Dinshaw, the previous guest was saying, and thank you so much for joining in, but the previous guest was saying that there is a probability that the market will tilt towards value and not growth. And the last 4 or 5 years, SBI's performance over Bajaj Finance is testimony to that, right? Value got it, and you guys were out there buying value. Are you here on betting on value, or are you betting on growth in consumption in some of the others where the premiums might be there, but there's a government push out there?
So Neeraj, actually we never call ourselves a value or growth investors. What we always say is that we try to buy value, growth at a value. So that's what we put it as. And frankly, I mean, looking at the way forward, it looks more and more obvious that even the government is now very clear that we need to have domestic consumption in place. So obviously all the derivatives of consumption, not only the pure consumption place, but also all the derivatives around it are gonna make a good amount of show a good amount of growth going forward. And as you rightly put it, I mean, the BFSI sector, which is a derivative of consumption, because these are the ones which aid consumption. Then consumption, pure play consumption, I don't think we are that keen on, because those are straightforward stories like FMCG or for that matter, consumer durables. I think all are expensive. Both these sectors are expensive. So we look at derivatives around it, hospitality, healthcare, tourism. These are the ones which we are betting on, platform companies. I think that's where you need to go. And as I always have said, that why we are so bullish on consumption is because the pre-millennials like us, which is the ones born before the 80s, are now becoming a minority in the consuming class. It's the millennials and the Generation Zs which are now really driving, an alpha of late, which are driving the consuming class. And these guys are very aggressive spenders, unlike us. So I've got full faith in that generation.
So we always learn a new term when we speak to Dinshaw. Then
What he's saying is that he and maybe some others are getting off, but people like me are in the consumption class right now.
I think you're desperately trying to put yourself in post-millennial. So then pre-millennial is the word of the day. Let's not even get into this Gen X, zillennial, whatever. So okay, for this pre-millennial or whatever it may be, Dinshaw, the fact is, for example, your FlexiCap fund has smashed it. Okay, so there has been, and congratulations on that, about 26%. Compounded annual return. For the next 2 years, what would a FlexiCap fund look like if you had to start today? Give our viewers something to take away from.
So I think, Tamanna, actually, I don't think the mix will change much. Frankly, because, I'm talking about the industry mix, because I think that's what we preempted earlier, and that's where the performance is coming from. However, you'll see a bit of, as I was telling the other anchors also, that the fact is that we launched a small cap fund, and we launched it recently. In fact, tomorrow is the first day the NAV will be disclosed. And that's what excites me more, because I think we timed it perfectly this time around also. And by the way, why we launched a small cap was basically because the underperformance of small cap vis-a-vis the large cap index was phenomenal. It was at a 5-year historic low. And I think that's where the small cap story really started, actually. And that's why we launched it. And frankly, I couldn't have timed it better. But as I was telling you that whenever we launch a new fund, the analysts get on the overdrive mode in our organization, and they come out with these beautiful new ideas. You'll get to see them very shortly when the fund goes public. But I'm sure a bulk of these ideas also will make it into my Flexi and all. So you'll see the mix in the capital, the market cap wise, the mix changing. But in terms of industries, we are fairly overweight on BFSI. We are overweight on consumers, platform companies, hospitals, hospitality. I think that will not change going forward. Maybe a few newer entrants coming in, and probably that's how it will be.
Well, all the best for the small cap fund as well, Dinshaw. Keep up the great work, and thank you so much for joining on such an important day. Really appreciate your time.
Thank you, Neeraj.
All right. Well, like we said, a bevy of very important market voices and joining us now is Mr. Nilesh Shah, MD of Kotak Mahindra AMC. And as I told you, Nilesh bhai, it was impossible to think of a day when the markets have hit all-time highs and you do not talk to NDTV profits. So great to have you. How are you feeling, Nilesh bhai? This has been a labored move to all-time highs after hitting them in September. Will the next set of rallies be more swift? Is the stage set for that? Or is it uncertainty that we are surrounded by?
A lot depends upon flows. We have seen clear division where domestic institutional investors led by mutual fund have been consistent buyer over last couple of years, and promoters and FPIs have been consistent seller. Now, against MSCI emerging market benchmark weight of about 18.5% to 19%, FPI ownership is roughly about 15.9%. But in that, there are passive funds which are also running at replication of benchmark index. That means active FPIs will be somewhere around 14 to 14.5%, and underweight of almost 1/4. Will they continue to run such large underweight? The market is expecting selling intensity to come down and eventually FPI turning buyer. If FPI buying resumes early, this rally can go higher. If FPI intensity comes down, the markets will consolidate and move forward. And if FPI buying is much later, then maybe we'll see some sideways market.
Nilesh bhai, hi, Tamanna here, and thank you so much for your time to us today. And I know you're talking about what role FPIs will now have in the continuation of this rally. Do you think the inking of the India-US trade deal will be that next trigger, which then ensures that we sustain How important does it become in the bigger picture, considering that we've reached here without those factors?
So undoubtedly, Tamanna, a good US tariff deal which removes unjust import duty levied on India for import of Russian oil, ignoring the fact that European Union and China is much bigger buyer of Russian energy. If that does materialize, there will be relief rally in the market. Now, please remember, market discounts rumor and sells on fact. So relief rally can happen in expectation of tariff deal, or if it is not discounted, it can happen post announcement of tariff deal. But certainly tariff deal could be one trigger for market to go up. The second thing could be the Russia-Ukraine peace proposal mediated by US. If that goes through and we don't have a tariff deal, probably the 25% additional import duty levied on India unreasonably for import of Indian oil, for Russian oil, could be removed. That itself could be a trigger for the market.
Nilesh bhai, yeah, what's the concern? I mean, I hear completely conflicting views on valuations as well, with some people saying that much above the long-term averages is a negative, some people saying that since the earnings growth cycle is starting, you probably expect that India has never been cheap. Do you believe valuations will be a hindrance, or will it be acceptable because India has always been expensive?
So again, there is no one standard way of looking at it, Neeraj bhai. Anyone who wants to buy will continue to raise bogey of excessive valuation. Anyone who is already owning stocks and invested into the market is likely to say valuations are reasonable. So one, there will be position talk. A buyer will seek lower valuation. A seller will say these valuations are reasonable. But removing those human biases, today, after 1.25 years of underperformance, India's premium over emerging market in terms of valuation has come down. It has come down to around historical averages. Undoubtedly, with better earnings growth, with better governance, India will trade at a premium. 1.25 years ago, we were trading at a large premium to our peer group. Now we are trading at around historical average. So I will be neither glass half full nor glass half empty. I will say beauty is in the eye of beholder. If you are long-term investor, because of earnings growth, you may think India is the cheapest emerging market. If you are a trader, you may think India is the most expensive emerging market. Take your pick.
The beautiful thing about that analogy, Nilesh bhai, is that Indian investors right now are gazing at markets with that love. So that really is working out. Just some specific stories in it, and one of the theories is that India will turn out to be an anti-AI trade. I want to take further a conversation we had at the NDTV Profit Ignite session, where you had talked about some of the dinosaurs. Do you think that the dinosaurs are beginning to move?
Tamanna, it's a tough call. Undoubtedly, the big dinosaurs also moved when their tail was on the fire. But that move was not sufficient. In an absolute world, every company is trying to improve. There's no doubt about it. But in the relative world which we are living in, I have to outperform my competitor also. In mutual fund, I don't get money only if I outperform benchmark indices. I also have to outperform my peer group. And this is where the difference between men's and boys will be created. There are many small, mid, and large cap companies which are leveraging technology, including AI, to create better, cheaper, faster solutions. And there are many companies which are behaving like dinosaur. Tail is on fire, but they are moving slowly.
No, so do you buy the theory that India could be the hedge against the AI trade?
So again, from a positioning point of view, undoubtedly, ours is a far more domestic growth story. It's driven by reforms unleashed by the government. It's driven by slow but steady improvement in productivity as infrastructure is being built and Indian talent is becoming entrepreneur in India. But at the same time, we'll have no option but to leverage AI to compete in the world. So I will put it, India is a story not for development of foundational AI like LLMs or GPUs, but it is a story of leveraging AI to create solutions for the world and benefiting out of it. AI is the highway. We are unlikely to build that highway. But on that highway, even after paying toll charges, we will be able to run various public transport utility like buses, on which passengers will find convenient to travel and pay us more charges.
Would the guys who help maintain the highway do well, Nilesh Bhai? And therefore the question is, Indian IT, which has long withstood the pressure of newer technology beating them up, this time around the story is the same thus far. Will Indian IT come out of it triumphantly? Is it a sector that is worth looking at despite the AI threat?
So, Neeraj Bhai, I'm giving answer without great conviction because as things move forward, we'll keep on changing our opinion.
Got it.
But within IT, I believe there are companies which are leveraging AI to deliver cheaper, better, faster solutions to customer. They are focused on enterprise AI, whereby they help companies to arrange their data, use LLMs to leverage those data for outcomes, and finally secure that data and knowledge so that your competitive advantage and privacy remains. Enterprise AI could be as big business as IT services business today. Indian IT companies will be globally competitive in enterprise AI business. So again, in the IT sector, you will find nimble companies and you will find dinosaurs. Better to be with nimble companies. But as I mentioned, this is not high conviction call. We have some positions in mid-cap IT companies. We believe they are on the right path, but every quarterly results, we will be carefully watching them.
Nilesh Bhai, one more question would be around whether it might help to have a domestic-centric portfolio at the current point of time versus having too many export-oriented themes, simply because all the pushes from the government, the policy push from the government on multiple things is pointing towards a revival of consumption. We've seen some numbers already. Would that be a good strategy or not quite?
So, Neeraj Bhai, broadly, yes, consumption will get supported by money kept by government in the pockets of income taxpayers, 1 lakh crore a year, on the pockets of bottom end of pyramid through GST cuts of about 2 lakh crore. And government is taking away 1 lakh crore through GST from the pockets of HNIs and rich people. But that's unlikely to impact their consumption. Then there is interest rate cut of about a percentage point, and who knows, we could be lucky on 5th of December. That will put about 1 lakh crore in the pockets of EMI borrowers. Then there is gaming ban, which is keeping 10,000 crore a month or 1,20,000 crore a month in the pockets of speculators. And then finally, there is mother of all, 8th pay commission recommendation, which over a period of time between central, state, local and PSU could benefit more than 3 crore Indians. Put together, a lot of money is going into the pockets of taxpayers, consumers, speculators, borrowers and government employees. That should support consumption in the days to come. Market is reasonably aware of all the details I mentioned, and hence a lot of it is in the prices.
Before we wrap up, and I know we extended this a bit, but can't not ask you about what you felt of the Indian cricket team fortunes. They are diametrically opposite to what's happening in the markets currently, and the cricket fan in India is distraught at how the test team is performing. What did you make of it? Will the markets be completely opposite of the fortunes of the Indian test team?
So Neeraj bhai, I will try to give this answer as a fund manager and not as a sports enthusiast. You have shared the feeling of every cricket fan at the miserable performance of Indian cricket team. But this is what happens when you build a portfolio for one particular cycle, and what you get is exactly opposite. We are trying to win a test match with T20 teams player. We are selecting people based on their IPL performance and T20 performance rather than Ranji performance. There are batsmen who are scoring tons of runs in Ranji matches, standing throughout the day on pitches, but we want to pick up cricketers who have done well in 20 overs. No doubt the results are disastrous. The same thing happens in equity market. You want to play for long term and take momentum stocks and then don't monitor them. The results are going to be exactly like India trying to win test match with T20 players.
Nilesh bhai, trust you to come up with the best analogy. So then I have to ask, who are the players in your dream test match team to beat for Indian equities? Or what kinds of players?
My fact sheet is visible to everyone. We disclose it every 15 days. As of today, as I mentioned, we are bullish banking and financial services, both private as well as public. We are also bullish on a longer term basis, consumer theme. So from here over medium term. Now, in that, it is more consumer discretionary rather than consumer staple. We also believe in this budget, the focus on government capex will continue, and construction companies are available at a reasonably low valuation compared to historical averages. They should also do well.
Thank you so much for speaking with us, Nilesh Shah there. Breaking down, how he sees this historic day for Indian markets. But we continue the coverage and the commentary here on this special show on NDTV Profit. Sandeep Tandon joins us now, founder and CIO of Quant Mutual Fund. Sandeep, thank you so much for speaking with us, because, it's important to sit back, take a pause and reflect when you get to an inflection point which has been long awaited. And I think this all-time high was long awaited, not just as another statistical notch, as crossing a number of hurdles. How do you look at it?
The only way I look at, though we are lifetime high, but there is hardly any smile on anybody's face because portfolio has not performed, because majority of the retail investor do have large amount of small and mid in that portfolio. That's the reason, despite we are at all-time high, there's hardly any excitement in the market. And the way I look at it is that obviously the large cap will perform very well, and we have been highlighting for last 2 months that we will not be surprised to see all-time high by December. It happened in November itself. So it's a process. So we have seen Nifty and Bank Nifty at lifetime high. We see gradually this rally will get extended towards mid and small also, maybe with a lag effect of week 10 days. But ultimately it has to move because the background was so perfect. Everybody has reached a stage. People have started actually giving up. We have seen some sort of capitulative move happening in last 10-15 days or so. And so the background was good. So that's the reason I think we have been saying we have been constructive. That's the reason we are largely 98% invested. And I think it's the background which is so good, we should participate rather than sitting on the sidelines.
Sandeep, good afternoon. Neeraj here. You tend to look at cycles so well. I wonder, where do you think, which cycle and where in that cycle are Indian markets right now?
So the way I look at, first of all, let's understand India right now from a medium term perspective, have low beta and negative correlation with the developed market, particularly the US. So if whatever reason, if global market you have seen when it corrected very recently, Indian market has not corrected at all. Rather, it was a small sort of consolidation with positive bias. The way we look at from a very near-term perspective, see in today's world, which is relatively geopolitical volatility is very high, narratives are floating around. So with that background, instead of talking from next 1 year or long-term perspective, which everybody knows is good for India, I just want to focus on 1 quarter perspective. And I think if I have to look at from a quarterly cycle perspective, I think background is perfect. The quarterly trends are up. So I would like to play with a long bias rather than running through a neutral bias.
Okay. And Sandeep, would the long bias, I heard you say in your opening answer that while there might be bias towards large caps right now, eventually the broader markets would perform as well. Would it be therefore safe to assume that 2026 as a calendar year, mota moti, I'm not saying exact to the month, to the last decimal, but mota moti, 2026 as a year could be a year wherein Indian markets at large would do very well, because the last 14 months we've been the rank underperformers.
So Neeraj, the way I will look at, I said in this so challenging and volatile world, I will not like to take that 1 year call right now. Okay. Obviously, 1 year and 5 years, we are very, very optimistic about India. We always say that something has changed in India. So India valuations are expensive and remain expensive, at least for maybe for another 22 years or so. That's the way we believe that when the demographic cycle peaks out in 2047, till the time this P multiple for India will remain elevated. Now, let's not get confused with long-term perspective with the short-term, because investors, it is our responsibility to generate returns. Okay, that's our core business. So that's the reason I say I will review the same, maybe the beginning of January or mid of January sort of thing is much better when we have yearly numbers and then we look at the data points and then take a 2020 call, 26 call. There will be more mature way of looking rather than predicting right now. Right now, I said just 1 quarter what we are looking at. So let's look at quarter to quarter as of now. That's a better way of dealing with the current environment rather than just getting carried away.
Oh, completely agreed, Sandeep. Just want to understand that you spoke about valuations. Are there any pockets of growth that you think are yet untapped, maybe flowing from policy push? For example, a couple of things in terms of policy push that we've had in the last few days and less than a week, really. One is this rare earth magnet policy, which has come in a 7,200 crore package. Then is the simplification of labor codes. If I go back a little further, then you have this huge push for indigenous production of ships in India and making us a shipbuilding power. Does all of this then eventually flow to gains for the private sector?
So, let's look at government initiative. I think the biggest focus of the current government is about ease of doing business. Okay, even this labor policy which has just come out, basically what it does, it's instead of looking at so many laws, it confines into 4 zones sort of thing or 4 codes sort of thing, and it's just trying to simplify. So I think when so many complexities which we have, and I think the biggest concern we have is about the judicial reform, which is badly needed for this country. Once you start getting these things, and I think the traction is good, we are moving in the right direction. See, all these things leads to a re-rating of a country rather than just looking at one sector or one stock. Because ease of doing business is very easy to talk and very difficult to practice. And I think government has demonstrated by taking multiple steps, okay, and if you heard the recent SEBI chairman statements or the RBI governor statement, all these things are endorsing what government doing about ease of doing business. So I am very constructive with that background. Now, obviously, any impact of GST, it's a time-consuming process. So like sometime market get very excited, which we have seen very recently in auto. Obviously, it was a festive month. So we have seen extraordinary numbers. I will not like to take a pause out here and see how in next 6 months will behave. But logically, demand should pick up, consumption should pick up, because not only the GST, the government has taken initiative on the income tax side, low interest rate environment, and the most important thing is underperformance which we have seen, and see the sentiment which has been so negative. All 3 points put together, I think background is perfect for a rally rather than getting too much disturb what happened in the past.
Okay. Sandeep, what are the risks to a near term or a medium term or a 1 year target? What are risks? Is it the trade truce not happening on time or not happening at all? Or is it something else from an Indian market's perspective?
So I tell you from a trade perspective see, don't look at trade just only from a US perspective. Okay. Yes, it is psychologically more important, but when I look at in terms of contribution is hardly 1.5% to the, or 1.25, 1.35 numbers to our GDP. So it's not very meaningful. Yes, sentiment wise it looks like. But what you really look at and analyze what government is doing, they're talking about bilateral trades getting built. So recently was Israel, or you've seen in what happened in the Middle East, now with UK and now with Europe. So I think government is taking right step instead of depending on one country, which is one of the biggest consumer like US. I think we have moving towards tie-up with this bilateral thing, which is more healthy and can be long lasting. And I always say in any crisis, Indian entrepreneurs have become more mature every crisis. And I think even this crisis, I will look that our Indian entrepreneur has understood the importance of concentration risk and they will diversify. And the trend is quite, when you interact with corporates, everybody is putting in that effort. So maybe it should be a short-term problem, but a very good step from a long-term perspective, the concentration risk will be diluted. And with this bilateral talks or the bilateral agreements which is going on, led by Commerce Minister, we have seen a very constructive thing. I think that's one reason I have a very strong view that USD INR pair is on the verge of peaking out, which means your long-term depreciating cycle, which we have seen from year on year, we can talk about 3 to 6% depreciation. I think that cycle is peaking out. So obviously the closer to 90 mark or 90 half plus minus 1 rupee here and there, we are there. And hence, I also believe that even rupee has a potential to appreciate from the current level. But I will not like to jump and really conclude and say this is the way it should happen. These are the data points which is endorsing when cycle. So either you look at a lot of people look at charts and say this is a breakout, or I call it peaking out. So I think my data points are more towards peaking out rather than breaking out. So that's a way how the interpretation changes when you look at data from multi-dimension perspective. And this is what is endorsing that risk in India per se is on the lower side. The risk which we are worried will be more global. And we have seen recent turmoil happening in the global equities. We're talking about the concern happening on the commodity side also, particularly on the precious metal side or the crypto side. We have seen extraordinary hype getting built and they need to be corrected. So I think these are good trends. Whenever you see a sharp spike, if it corrects, you have to live with these volatile world. And that's the way we should readjust accordingly.
Okay. Sandeep, thank you so much for joining us today and giving us your perspective. And I would say a bit of a sobering take on the all-time high, which is also very important to see it from a little longer perspective. So Sandeep Tandon there joining that whole host of great guests that you heard from. And I think the long and short of it, Neeraj, yes, more to come. Yes, portfolios have not performed like the Nifty has, but nevertheless, the index is also something everyone is invested in.
Yeah, most certainly.
And directionally, things seem to have changed. I mean, more possible tailwinds than headwinds, I would say, because larger likelihood of the trade deal getting sorted out, the Ukraine-Russia war getting sorted out, versus something unknown which could happen, which is a risk at any point, at any time.
Yeah, there's one key risk that is visible, otherwise the deck is set for some upsides.
What is that one?
Which is the India trade truce. Risk as in the one development needs to happen, which is this. Otherwise,
I mean, my point is we've done without it.
Yeah.
So it coming will be a positive.
Yes.
It worsening is unlikely.
Just that the impact of that on jobs and thereby on trade data, etc.
The delay is a possible, is a problem if there is a delay. Nevertheless, that's all the time we have on this special edition. So thank you so much for watching. Stay tuned. All of the action continues on NDTV Profit.
highs for the Indian market.
Just a number over there, and yes, those all-time highs will come. There will be many more records there, but the fact that this has been a long fought battle, it's come after reform.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान.
Hello and welcome to Profit Buzzers, and I am Sharad Dubey, and with me is Shriyansi. You're watching NDTV Profit. Today we saw the Nifty and even Sensex hitting their lifetime highs. Nifty Bank also showing a strong strength coming in, but of course there is a technical cool off happening in the indices right now, and Nifty is in the red right now. And Shriyansi, this is just a healthy technical cool off, nothing to panic. The chart setups are really strong and it's good because the call options also come into place. And interestingly, some profit booking also comes in. But remember, today is expiry also. That's why the volatility would be there coming in the last 90 odd minutes.
No, absolutely. And this is a great day to be looking at the markets, right?
Yes.
And it's a very happy day to be looking at the markets. When you look at the Nifty or the Sensex, that's the kind of sense that you're getting as well. In terms of the sectors, yes, you do have the sectors largely a little bit on the back foot now. PSU, bank, realty, energy. You've been seeing a deeper shade of red when it comes to some of these sectors. But what you're seeing largely is that you, of course, do have media leading gains, finance, bank, pharma. Some of those sectors are doing quite well for themselves, and Nifty and Sensex, there's nothing like it, right? You've seen that rally come in after so many days for the Nifty, after almost a year.
14 months, 289 trading sessions, took a lot of patience of us as well as investors and all the stakeholders. But net it has been a very positive day going ahead. Of course, broader indices also not showing that much support, and they haven't actually hit their all-time high levels. So we'll expect that a couple of important triggers like the RBI MPC meet and US India's trade completion, the agreements, that's also we'll look at. The small cap indices days low. Let's pull out the contributors for Nifty. Of course, HDFC Bank holding the fort, but Reliance and Bharti Airtel, large major players who were very helpful in the rally in the last 14 months, they are seeing profit booking as well. So action is changing. The put space is going up high. Let's just pull up the BSE 500 contribution and then we'll go to the management of Pace Digitech. We see largely here the BSE 500 counterpart, Ashok Leyland, Tejas Network doing well in the trade. But a big block happened in Whirlpool, and that's why its stock is down 11% and selling coming in Natco Pharma, Avanti Feeds as well. Going ahead, let's get in Pace Digitech in focus. The company came out with a weak set of numbers and margins were also under pressure, even as its energy storage business delivered a strong growth. Company has received an order of roughly 199 crore rupees. To talk us more about this outlook and growth, we are joined by Rajiv Madhisetti. He's the director at Pace Digitech. A very good afternoon to you, Madhisetti. The interesting part is the day has been really strong, but your order book, that is roughly 9,135 odd crore rupees. Now, how much of that will convert in FY26 and 27? Can you quantify that?
Yeah, thank you for this opportunity. Yes, we are building great in our order book for our battery energy storage systems. So as per the latest order, what we have got an order for 199 crores from L&T for the supply of battery energy storage systems. So to your question, yes, the order which we received for this 199 crores is executable in this financial year. So we are targeting to close the order by end of this financial year. But the remaining, so we have three types of orders in battery energy storage system, like supply, EPC and developer model, what we call. So the EPC and developer model will continue in the following financial years, whereas the supply orders are for closure this year.
All right, then, so that's what we're expecting there. But I also wanted to get a little bit of, this is of course Shreyansi joining in the conversation. And very good afternoon to you, Mr. Madhisetti. I wanted to get a sense of what you think about the battery energy storage system in terms of the 5 gigawatt plant. In terms of the full utilization, what is the timeline that you then have in mind? And in terms of the revenue contribution when it comes to this particular plant, what are you expecting when it comes to FY27 as well as FY26?
So the battery energy storage system facility that we have, which is 5 gigawatt, is in full capacity now, and we have orders for more than 5 gigawatt at this point. And we are expecting the facility to be executed in full efficiency next financial year. And we have the orders backing for that. So we expect to generate a revenue between 3,000 to 3,500 crores from this manufacturing facility through this three types of businesses, what I explained earlier.
Madhisetti, the sustainable margin band going forward, what would that be? Of course, we just get in the consolidated one in a blended way. So what would be your target?
So of course, in supply orders, we would have better margins and better contributions. Whereas when it comes to projects, we would have a slightly lower margin compared to the supply orders. But as per our guidance and target, we are in line with that.
Okay, so you're not changing your guidance going ahead. There are 4 important projects also coming up in a lot of new segments. I just wanted to know about your new segments and the order flows coming in. If you could just give us the guidance in that.
So we are targeting 2 major sectors, energy and telecom. In telecom, we have a couple of more bids submitted and we are waiting for the results to get in more business. And in energy also, like battery energy storage systems and solar. So we are targeting projects in this, which we have awarded a few and we are expecting the results for a few more to come. So with this, we see that our order book will be strong and as per our guidance and targets.
All right, then. So those are the targets that we're keeping in mind when it comes to this particular company. Thank you so much, Mr. Madhisetti, for taking time out and joining us this afternoon. But tell you what, with that, that's all the time that we had on this edition of Profit Buzzers. It's a very good day to be tuned in, and it's a very good day to be looking at the markets. Thank you so much for tuning in, though.
We have hit record highs. Okay, woohoo!
Right, there we have it.
We are at all-time highs for the Indian market.
Just a number over there, and yes, those all-time highs will come. There will be many more records there, but the fact that this has been a long fought battle, it's come after reform.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान सोनू निगम के लिए जोरदार तालियां.
The NDTV profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio.
Good afternoon. You're watching NDTV Profit Small Cap Business Show on the channel with me, Soumit Sarkar, and my co-anchor Varsha. Well, Varsha, it took us 289 days literally to touch the record high, but at this point, from the record highs, we have slipped very sharply around 160 points down in trade and trading near the day's lowest point right now.
Exactly, but you know, Soumit, I would say at least the start was good.
Yeah.
So, you know, now as Soumit was saying, see Nifty 50 is down almost 0.22%. Let's see, you know, who are the contributors rather when it comes to Nifty 50. On the gainers side though, you have Bajaj Finance, L&T, HUL, Shriram Finance and Bajaj Finance pulling up the index, while on the loser side though you have Eicher, Eternal, ONGC, Adani Enterprises and Bajaj Auto. Well, you know, but broader markets, if I were to talk about, are feeling the pain very sharply. So let's see what Nifty Midcap 150 is doing, is down almost 0.37%. Though Ashok Leyland, M&M Finance, Escorts and L&T Tech are some of the gainers when it comes to Midcap 250, Midcap 150, while on the loser side though you have Motilal Oswal, Indian Bank, CRISIL and Godrej Industries. But you know, let's also talk about Small Cap 250. Let's see what that index is doing. Well, it's down almost, if I were to talk about Small Cap 250, it's also, you know, feeling the sharp pain when it comes to broader markets as well. But let's see who are the gainers when it comes to Small Cap 250. There you go, it's down 0.55%. On the gainer side though, you have GMDC, you have Tejas Network, you have Gillette, you have Chennai Petro and Tata Tele. While on the laggards when it comes to, you know, Nifty Small Cap 250, you have Whirlpool. This is on the back of the block deal that has happened. Even Natco Pharma is also under pressure. While Indigo Paints and Avanti Feeds are some of the stocks which are under pressure when it comes to Small Cap 250. But also, let's talk about the other active securities. You know, you have Best Agro, you have Patel Engineering and Prostram Info Systems, which are, there you go, Best Agro is up almost 18-19%. When it comes to Patel Engineering, this is buzzing on the back of order which company has received. Even Prostram Info is up almost 16%. On the some stocks are buzzing. This is on the back of volumes though. You have Automotive Axles, you have India, US, Biotech and Lux Industries which are buzzing when it comes to, you know, volume. So overall, you know, I would say a pretty good start, but yes, broader markets are feeling the pain when it comes to, you know, index today. But moving on, let's invite our first management of IndiCube, wherein let me just, you know, talk about the company though. IndiCube, wherein company provides workplace solutions to its clients. Talking about its Q2 key takeaways, they've given a strong set of numbers. High finance cost and depreciation is tanking bottom line though. Finance cost is up 36%, high 96% of its revenue being recurring. But you know, to speak more about the numbers and what is the growth outlook ahead, I am here joined by Mr. Rishi Das, who is founder and CEO of IndiCube. Well, Mr. Das, you know, welcome to NDTV Profit. It's pleasure having you. Let me start off by margins and revenue growth being healthy. Are you path to profitability now? Because top line growth is about 30% for the next 2 years. So just wanted an update. What is the path to profitability from here?
Thank you, Varsha, for giving us the opportunity. So if you notice, there are two accounting standards. One is the Ind AS accounting standard, the other is the IGAAP accounting standard. and IGAP is pretty much what is followed across. So by that standard, we are already profitable for the last 3 years, and we have been paying income taxes. For example, if you look at our H1 26 numbers, we have a 47 crore PAT already there. And we are CRISIL A plus rated with stable outlook, and that has been reaffirmed by CRISIL. So from that point of view, we are already on the path of profitability. It is just because of the Ind AS accounting standard, where basically all our leases are capitalized and they are treated as asset and then depreciated, is where you see an operating loss. But we have been paying income taxes, as I said, and we are already profitable.
Understood. Also, Mr. Das, value-added services contribute, if I were to talk about the contribution of value-added services, which increased from 11% to 13%.
Right.
How much uptick is expected more, and what are the key growth drivers? The question being, where you want to take this contribution of value-added services to maybe, in next 1 or 2 years?
So as you rightly highlighted, the share of value-added services has been growing. And we are very hopeful that next year this should be about 15% of our revenue. And there are multiple things that we offer as part of value-added services, starting from food, going up to transport, providing IT hardware on rent to companies, and various other B2B and B2C services. So all of them are seeing good, healthy, mid to high double-digit growth. Some of these growth services are growing even faster than that. So that's where we see that this will continue, because what is happening as customers are coming to us, they're getting comfortable, they are buying more from us to make their ease of doing business far better.
Right, sir. Just wanted to understand one thing from you. Any details if you could share with us on the new signings and the launch pipeline that you have for the second half of this financial year and for FY27 as well?
Yeah, so we have a very healthy pipeline. If you look at our total area under management by end of H1 is about 9.14 million square feet. And our leased area is 5.8 million. So it provides us a very healthy pipeline of about 3.3 million square feet. And this pipeline is going to get delivered to us for occupancy over the next 18 to 24 months. So on a safe assumption, one can take up that this is a good supply pipeline. And as you will notice, the commercial real estate is doing very, very well. Most of the good performing micro markets are already running at 90% plus occupancy. So the supply is a key driver of growth in these geographies. So we are very healthy on that. Then we also have added a lot of new cities. In the last 12 months, we have added Indore, Mohali, and Calcutta. And we see that over every quarter, we will add 1 or 2 more cities going forward in future. We have been having a very healthy occupancy level, 87% to be precise at the end of H1. And we have traditionally maintained at an overall level between 80 and 85% occupancy. And at a steady state center, which are more than 12 months, we have maintained between 85 and 90% occupancy. Talking about the significant wins, we had a very large, basically asset management company pick up a 1.4 lakh square feet of space. That will get operational in the next quarter. We also have a large automotive major, which has given us a very large design and build project in Hyderabad. And there are a few more wins where we see that these deals will start giving us revenue momentum from the next quarter onwards.
So, Mr. Das, also, just wanted to talk about 2 things over here. One is, what is the sales growth which is expected for, FY26 and 27? Because you saw good growth in FY23 and a decent kind of growth in FY24 as well, though the growth was reduced. But from 24 to 25, if you see, the growth has been substantially reduced. So, just wanted to know, what is the growth expected for 26 and 27 with the expected EBITDA margins?
Yeah. On a revenue side, we see the growth to be around, I will say 30% odd, maybe a couple of percentage points plus minus. That is how we see the revenue growth. Our EBITDA growth, as you see, has been growing at a much higher pace. We see that will grow at about 40 to 50%. EBITDA growth is something which we are very hopeful. And as I mentioned to you, if you look at just the area addition, because that is a very, very leading indicator of things to come for us. So there we have a very healthy pipeline. Just by area, we will grow by about 25%. And if you add on top of that the same center revenue, the revenue coming from value-added services and all that, we are very hopeful that we should be able to maintain the top line growth at about 30% over the next couple of years.
Right. And what would be your strategy? Will you focus more on tier 1 or tier 2? Because your larger peers and other players have been focusing more on the tier 2 cities.
So, as I mentioned, we have added 3 cities in the last last 12 months, and we are on our path. Like today, already we are in 16 cities across India, and so for us, key thing is follow the talent. Wherever talent is going, we have to go there. Plus, what is happening post-COVID, jobs are going where people are. Unlike when we joined industry a couple of decades back, it was more like people going where jobs were. So that's a big shift. So tier 2 will be an integral part of our strategy, even though tier 2 from a presence point of view is going to be good, but I am not very sure that will tier 2 start contributing too much of area to start off. We are also looking at a lot of growth within the tier 1 into newer micro markets. For example, if you look at Navi Mumbai with the new airport getting operational soon, we see a lot of traction over there. So there are a lot of gaps we still have in the tier 1 cities, which we are looking at tapping along with the tier 2.
Got it. Also, Mr. Das, just wanted to have what are the capex plans? Any ballpark number or target that you've set when it comes to capex?
So Varsha will add between, I will say, 1.2 to 1.5 million square feet annually, and that will require a capex funding of about 150 to 200 crores annually. But if you look at our free cash flows that we generated in H1 are about 152 crores. So from that point of view, we have a lot of now healthy operating free cash flow, which should fund a lot of a growth for us. So in the range of, I will say, about 350 crore kind of a capex is what we see we will be incurring over the next couple of years.
And lastly, sir, just wanted to understand the area under management stood at close to, I believe, 9.14 million square feet. This will be converted into rent-paying area, say, in the next 18 to 24 months. So what is the kind of yield that you're expecting from this AUM over the next 12 to 18 to 24 months?
So basically here, Somit, if you see, we have been maintaining about 85% occupancy on an average. So in 2 years, if you assume that we will be having, say, a 9.5 to 10 million of rent paying area, about 8.5 million will be our rent yielding area, going by the 85% occupancy. And from 5.8, we see this number growing to, say, 8.5 to 8.8 million. So about 3 million addition should happen should happen to the rent yielding area over the next couple of years.
Right. Thank you, sir. Thank you for joining us and giving us the way forward for IndiCube.
Yeah. Thank you, Samit. Thank you, Varsha. Thank you.
Let's also welcome in our fundamental guest for the show today, Prashant Tapse, Senior Vice President Analyst with Mehta Equities. Prashant, you heard the management's strong growth outlook. They're expecting a lot of area that would come into a good, strong launch pipeline as well that they have for the second half. How are you looking at this counter?
I think before counter, I think the space is really good. I think it's a very niche space right now, growing very fast. I think the way the management said 30-40% growth in the top line, obviously all the 3-4 listed companies will do the same kind of growth. But again, what makes IndiCube a difference would be, again, they are targeting a lot of micro centers in the tier 1 cities where there is a gap of workspace availability. The way they are said, the New Mumbai project, I think that would be a good yielding project going forward for next 12 months to 16 months. But overall, I think in terms of fundamental, I think all the 4 companies which are listed are doing good. This company makes something different with respect to their occupancy, which is almost the highest, almost 85 plus kind of occupancy percentage of their seats. So I think the new space which is going to add, obviously, if you compare the same kind of occupancy level of 85% plus, there will be good growth in terms of their profitability going forward. So long term, obviously, the space looks very aggressive, and IndiCube is a good candidate to look at.
Right. Thank you so much for that view, Prashant. Well, moving on, Midwest shares are buzzing today, now tracking the broader rally in rare earth stocks after the cabinet cleared 7,300 crore magnet manufacturing scheme. Anushi brings us more details.
Right, so Varsha, what we are seeing is that for Midwest is in focus on the back of this whole rare earth magnet scheme that the government is bringing in, so 7,300 crore of an overall
scheme that we are looking at. So a lot of players in this particular area have been in focus. Just speaking about Midwest, it's a recently listed company. Today's just volumes, if we check 3 times over the 20-day average that we are looking at, and it has made its biggest intraday gain since the listing period itself. Now, do note that the company is in the business of exploration, mining, as well of natural stones is what we are looking at, and is now planning to diversify into heavy mineral sands and rare earth elements, which makes it a direct beneficiary of the scheme which is coming in effect. Now, it also produces wide range of granites like Black Galaxy, Absolute Black and Tan Brown as well, and operates about 16 granite mines across 6 locations in Telangana as well as Andhra Pradesh as we speak. Do note that the company marked its listing on 24th October of this year, and this is at a price of 1165. So if you just take the listing price in account, we've seen about a 24% of an uptick from the issue price itself. So it's just a limited time period that we are looking at for that. But considering that, if we look at the financials of the second quarter, revenues are about a 12% of an uptick in terms of where the sequential performance is concerned, while margins saw 200 basis points of an improvement to 29% versus 27%, and net profit was also up around 17%. Talking about the historical financials as well, if you just look at the margins that have oscillated between the range of 26% to 27% in these last 3 periods that we are looking at, while PAT's at 24 crore as of the June data that we have. So this is the overall perspective that we have for Midwest for now.
Thank you so much, Anushi, for all the details. Well, Prashant, what is your view when it comes to Midwest, and also any other stocks that you have on radar on the back of rare earth magnet scheme, if any?
I think with respect to Midwest, again, it's too early to say it's directly benefiting the rare earth magnet mining, and also they are still planning it, and government is giving a lot of schemes so that companies like Midwest and many companies like GMDC or Hindustan Zinc, they are also planning to do some kind of investments or hunting for some kind of mines in India. Obviously, we all know that 90+% of the rare earth magnets have been catered from China, and rest 10% has been the rest of the world. And India is still a 1 or 2% kind of submit, which is not simply giving some kind of supply support to the Indian needs. Obviously, government is supporting some kind of schemes that will be benefiting these companies, but it's a long-term story. Too early to say this will be a multi-bagger with respect to the rare earth magnet. But GMDC looks very good for me at this point of time. They have their experiences in mining and all. If they get some kind of mining opportunity for rare earth, so that would be a better stock for me to go through and look at rare earth magnet story.
Right. Prashant, just wanted to understand, have you tracked this counter, Patel Engineering, a big order win that has come in? The stock has jumped up nearly 16% in trade. But if you look at the charts, the stock share prices have even fallen from 50 to around 30-35 rupees. And after that, we are seeing this big move coming in because of the order win. Have you tracked this counter?
I think yes, on a very decent way, the stock has been performing very well quarter on quarter. But this order book has given some kind of good, strong visibility for a company which was underperforming from last almost 1 year. Last December, the stock was trading at above 50, and now it was trading around 30 odd levels. So some kind of big order books obviously give some kind of visibility, some kind of margin improvement, which was missing in the company from the recent times. So I think that was the only one trigger, but I think this should be an opportunity to book profits.
Right. Thank you so much, Prashant, for the view. Well, time to dive into the F&O market setup and the cues shaping trade today. Let's bring in Sharad for a snapshot for the trade today. Sharad, over to you.
Well, if you see the F&O markets, there is some volatility, and Sensex is having an expiry impact as well. Looking at the numbers, a sea of red coming in, but Sensex did hit its lifetime high levels, and technically this is a healthy pause coming in the markets. Let's look at the contracts, how actually they're playing out, and the PCR numbers were on the higher side. So action is much more happening in the puts segment, and the story is repeating in the BankX segment as well. Largely we see the support from the larger players that is coming off in the trade. And this is a light profit booking coming ahead. There was a strong up move in the BankX stocks. If you could just show the BankX active call put options as well, where we see the action moving around. Only HDFC Bank is holding the fort. The other companies itself, you see not so much support, but yes, ICICI Bank also holding a good strength overall. Let's look at the stocks where the action is. Strong longs, where are they being developed? Of course, the list is becoming smaller. Ashok Leyland and Samvardhan also come into this picture. The auto names are doing well. Remember, November auto sales also will be coming out. Apart from this, let's look at the short covering candidates to make it to the list. Bajaj Finance and PV Fintech Financials are seeing a strong up move. Long unwinding is Oil India and Tata Elxsi, and short build-up where action has moved. This includes Keynes and PG Electroplast, all of them are the EMS players, and this is something which is pretty much important. But yes, a technical sell-off or a cooling is happening when it comes to the Sensex on its expiry day.
Thank you, Sharad, for that extensive FNO market check. Well, moving on, Sanjay Patel, the Managing Director of Tempo Global, is now joining us to give us an outlook on how should one look at the company. So firstly, to start off with, in the second quarter, if you look at your EBITDA margins, it has expanded from around 8% to 14%. But how should one look at this margins going forward? What would be the steady state of margin that one should expect from your company?
Steady margins could be around 10 to 12% on an average for next 3 years, next 3 coming years.
So targeting, given the fact that you have 60% of your revenue coming from the engineering products in FY27, any revenue guidance if you could share us? How much growth can one should expect over the next 2 years?
So on an average, it should be around 35 to 40% growth year on year.
Hi, Mr. Patel. This is Varsha this side. Welcome to NDTV Profit. Well, talking about the order book, sir, if you see, you have almost 1,450 crores of order book. What is the execution timelines of this order book?
So each order varies between 12 to 24 months, and most of the orders are in motion. So we consider that next year 50% of the orders will be completed, and in the next other quarter, total orders will be completed in two coming years.
Understood. Also, on the bidding pipeline, so I think you have 2,150 crores of bidding pipeline. What win rate do you target when it comes to the order pipeline?
So we are L1 in those orders, but those orders will come down by first quarter of next year. After that, their execution will start.
And what would be the
Technically,
execution?
we are approved. Yes, sir.
And sir, what would be the execution timeline for this?
It is 18 months, around 18 to 24 months.
Right. So engineering business is something that you're expecting that to grow much higher compared to what it is right now. But what are those factors because of which you're so confident that the engineering business will contribute nearly 60% to your top line by FY27?
So we have the engineering team which is taking us ahead. We are giving planning and execution of the project in a timely manner. Whichever orders we have taken in the past for EPC, we have closed in before time. That is why the scale of orders are coming in more, and companies who have placed orders have confidence that this company will surely give a defined timeline and complete the orders. So overall, we are setting up a team which is helping consultants, architects, and the customers who are completing the projects. That is why we have a very good order book, and our execution are done on timely manner.
Understood. And Mr. Patel, considering the order book that you have and the bidding pipeline that you have, you said that 35 to 40% is the revenue growth that you're expecting. Are you being more conservative? Because if I were to talk about the last 3 years, your CAGR has been, revenue growth CAGR has been around 62%. So are you being on the conservative side when you say 35 to 40% of revenue growth?
Yes, yes.
All right, got that point.
Yes, yes. We are being very conservative, and we want to surprise market every time.
All right. Also on the textile business, is the textile business, because it grew strongly in H1 but is expected to become only 10% of your FY27 revenue. Just wanted to understand, would this be a purely opportunistic business, or will you require a fresh investment when it comes to your textile business?
Textile, we are not investing much more. It is only our generation which have been doing this business. Slowly we are curtailing that business, and by FY27, March 28, we'll be closing this business and we'll be shifting it to other activities. We are more mainly focusing now on engineering and manufacturing.
Understood. Also onto the defense business, when do you expect the defense vertical to meaningfully impact revenue?
So defense is a totally separate company. It is 100%. This company will start manufacturing by first or second quarter of next year, and commercial production as it starts, it is 100% sold because it is bought out, backed by the technology transfer people.
Understood.
Global Industries is holding 75% in that company, sir. Yes, ma'am.
Understood. Onto the export business, sir. Exports were 16% in H1. What is the target when it comes to your exports for FY27 and maybe for 28 as well?
Exports will grow on a higher side because we are multiplying our manufacturing capacity, and we expect it to grow to 30 to 40% of the production every year on year.
Understood. Well, thank you, Mr. Patel, for answering all the questions, and all the best for the business.
Thank you, ma'am. Thank you very much.
Well, this is all the time that we have on this edition of Small Cap Buzzers. Thank you so much for watching, and stay tuned for NDTV Profit.
Okay, woohoo!
Right, there we have it.
We are at all-time highs for the Indian market.
Just a number over there, and yes, those all-time highs will come. There will be many more records there, but the fact that this has been a long-fought battle, it's come after reform.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सबके लिए जोरदार तालियां।
The NDTV profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
We're coming to you live from Bengaluru, where Mahindra has actually inaugurated the new electric vehicle, the 9S, to talk more about what it means for the company, as well as what he's currently seeing on the ground. I'm now being joined by R. Velusamy. He is the president of the automotive business. He's also the managing director of Mahindra Electric Automotive Limited. Mr. Velusamy, very good afternoon, and thanks so much for joining in today. Firstly, many congratulations on the launch. It's a big one, to say the least. There's always a couple of points that Indians always talk about, which is volumes and pricing. On pricing, you have given a stellar number, because considering a 7-seater, all variants are priced under 30 lakhs, starting from 19 point some numbers at the end. How do you currently describe of what you're giving to the customer at this particular price point?
So you said big one, and actually it is a big space, and you said it is the least one. It's the best of one. as you see, around 20 lakhs, 20 to 24 lakhs, 24 to 28 lakhs, and about 24 lakhs, about 28 lakhs. We mapped out, and we also got the feedback from the North India, as we explained. The customers are looking for big SUVs and in the electric form as well. Also, the people looking for 7-seaters, the families and who wants to go outside with their parents and kids and playing around and all this stuff. So this need came from north of India, but I am sure the south of India also will love it. That's the unique insight that we got it, and then we built it as a third product after the BE6 and 9E. The 9S is coming. The unique proposition of this is the second row seat is sliding, which means if the number of people are only for the 2 rows, they can move the second row backwards and create enormous amount of space for the second row. They can play around. But if there is a family, they can also move the middle row towards the front and share the space with the third row passenger. And third row is not an apologetic space anymore, leg room. It's a good leg room they can share. So that's the introduction that we did. And the second row has an ventilated seats. It's not the driver seat alone, the second row seat, so the family can enjoy it. The co-driver seat has the powered one and the ventilated one. Not only the driver one, the powered one, the driver. The co-driver seat has another unique technology in it. The co-driver seat can also be operated by the person who is sitting in the co-driver. Also, the person who is sitting in the second row can operate the co-driver seat. As well. Yeah, so there is a double control in it. But if your boss is sitting, he doesn't need to ask, he or she doesn't need to ask the driver to move the co-driver, and he can just press the button, it will move forward.
So definitely a lot of...
So that's the next gen EV that has arrived for an M&M, like the all-time highs that have arrived for the markets yet again. Interesting day of trade. We have cooled off. And Sharad and I were just discussing right now that it seems this is a healthy cool off that we are seeing in the markets. And first up, welcome to India Market Close from Sharad Dubey and myself, Veeral Dadia. But very quickly, 26,174 is what you're tracking on a Nifty 50. If you can just quickly pull up the intraday chart, because you have a slight bit of outperformance coming in from the banking majors. You saw the all-time high as we achieved. We actually scaled to levels of almost 26,300 in intraday trade, and from there right now, we've gone to the day's lowest levels as well. A minor pullback that's coming in right now as we speak. If you talk about where the support is, 26,200 is that crucial support level that you're tracking as well right now. 26,300. So that broad range of 26,000 to 26,300 is what you should be watching out for now. Let's quickly pull up Bank Nifty intraday chart as well and see what's happening, because that is one of the factors that is fueling the rally as well. Completely in the green throughout the day. It actually dipped but has not really managed to get into the red today, which is very important. It's staying at levels of around 0.2%. Let's quickly look at the sectoral heat map and then we look at all the components in terms of Nifty 50, what's happening there, and the breadth. See this. Breadth absolutely in favor of the bears, and that's what the screen is telling you right now. Oil and gas, PSU bank index, consumer durables, real estate and consumption. These are the sectors which are losing out. What's gaining is media, private banks and the Bank Nifty. Let's quickly pull up the heat map in terms of Nifty 50 as well and the advanced decline ratio, and then we look at the reasons what has fueled the rally. Bajaj Finance, you have Shriram Finance, Hindalco, L&T, HUL, few of the other names which are gaining, but clearly the breadth is now in favor of the bears, with the iSure losing out. The top loser today, Adani Enterprises, Bajaj Auto, SBI, Maruti. In fact, the auto pack ahead of the auto sales numbers that will trickle in on Monday next week are seeing some bit of pressure. India VIX 11.89. You know, it's remaining stable in that 11.5 to 12 kind of a range, and that is telling you that yes, there is not that amount of volatility right now, but it's pretty stable as we speak. Now let's quickly understand, you know, what are the reasons that have led to this kind of a rally? What's fueling it? First up, there is strong buying that's coming in mainly in the large cap segments. Now, it's the broader markets which are still seeing the pain. And the question from here that comes up is the rally in the broader markets about to start or not? And that's what we need to look at. The growth that has come in has mainly been led by BFSI segment, and it's the private and the PSU banking space which is seeing a good amount of run up. In fact, analysts are more positive on the PSU banks versus the private banking space, and the positiveness is in the smaller names versus the large cap names now. Secondly, two brokerages, Macquarie and JP Morgan, have actually turned bullish when it comes to India, and that is one of the key positives that you should be tracking, along with what IMF has come out and said as well. They have categorically been very positive when it comes to India's growth story. So this is coming in at a time when Nifty has scaled an all-time high. Fourthly, if you talk about the India-US trade, that may be at completion stage, and the completion stage may be near. If it happens in 2025 calendar year, that's what the street is anticipating, and that's what the numbers are telling you. And there is a possibility of the earnings upgrade that could likely come in from the third quarter. And this is from the commentary that we've spoken to a couple of analysts, fund managers and CIOs. That's what they have told us. So these are the 5 factors that we're tracking so far. But what next for the markets is going to be the key. But before that, let's quickly hear out all the market veterans as to what they had to say as and when now that Nifty has scaled record high levels in intraday trade today, and what is lined up and what's in store.
Going ahead, given that we are coming from a low base, I think a 12 to 15% kind of earnings growth is likely to happen in 26. Now, on that kind of scenario, you can easily assume that Nifty will definitely outperform this 15% number. So a 15 to 20% kind of growth next year for Nifty is not really challenging.
The market was led by capex-driven stories for the past 4 or 5 years, up until I would say 24 or early 25. That situation may not continue going forward, whereas there will be select pockets within those capex related stories which will still continue to deliver earnings and which will continue to probably outperform. One needs to be a little bit more selective in that pocket. Whereas consumption probably will be the one which will drive the economy as well as markets from here on.
My working number on the Nifty from a more medium-term perspective is 27,500 that I've maintained all along. And my longer-term working number for the next year is about 28,400. Now, that's about 12-13% away from where we are. And I think these are realistic targets that I want to work with. And it's not going to be about the Nifty, as I've highlighted multiple times. It's going to be about stocks, sectors, themes, pockets. And if you are in those right pockets, led by, say, banking, by metals, led by PSU, autos, is where the real money will be made.
Play consumption, I don't think we are that keen on, because those are straightforward stories like FMCG or for that matter, consumer durables. I think all are expensive. Both these sectors are expensive. So we look at derivatives around it, hospitality, healthcare, tourism. These are the ones which we are betting on, platform companies. I think that's where you need to go.
Good US tariff deal which removes unjust import duty levied on India for import of Russian oil, ignoring the fact that European Union and China is much bigger buyer of Russian energy. If that does materialize, there will be relief rally in the market. Now, please remember, market discounts rumor and sells on fact. So relief rally can happen in expectation of tariff deal, or if it is not discounted, it can happen post announcement of tariff deal. But certainly tariff deal could be one trigger for market to go up.
1 year and 5 years, we are very, very optimistic about India. We always say that something has changed in India. So India valuations are expensive and remain expensive, at least for maybe for another 22 years or so. That's the way we believe that when the demographic cycle peaks out in 2047, till the time this P multiple for India will remain elevated. Now, let's not get confused with long-term perspective with the short-term, because investors, it is our responsibility to generate returns. Okay, that's our core business. So that's the reason I say I will review the same, maybe the beginning of January or mid of January.
Markets are at peak power and our guests have given their important views. But the journey has not been that easy, Hiral. And there's a saying, sabar ka phal meetha hota hai. And right now we are seeing that in days trade, Nifty all-time high levels. But the journey, if you look at it, it took 289 trading sessions. That's roughly 14 months. Over here, now we are seeing the growth coming in. And of course, there were some good contributors also making it to the list. They include Bharti Airtel, ICICI Bank, Reliance, who came in. But the rally, it's not broad-based. Only 3% of the stocks in Nifty 500 have hit their 52-week high levels. And till now, you must be wondering, your portfolio, it might be still in red, but the markets are in the lifetime high levels. 52-week high stocks are also on your screen. MCX, Shriram Finance, all of them making it to the list, but broader market, no participation. Nifty mid-cap has been just flat. And mid-cap gainers, some good ones I have taken out. BSC, Vari Energies, Paytm make it to the list. Small cap, the story is more bad. It's down 9% compared to last time when Nifty hit its all-time high levels. Force Motors, Ather Energy, Laurus Labs, MCX, they become exceptions here. And Nifty gainers, they can pull them out. Eicher Motors, Bharat Electronics and Bajaj Finance, they make it to the list. And Eicher Motors has done a significant jump. The banking space, Hiral was mentioning, Canara Bank, Federal Bank, all of them coming. And Nifty PSU Bank, they have gained 20% as compared to the Nifty's rally, which we saw in the last 14 months. So pick up a PSU bank, and largely most of them have given returns, but there are some laggards also which you should focus on. Trent, Tata Motors, Bajaj Auto, Coal India and TCS on the losing side. But the ones who are gaining the most from 52-week low, they include M&M, Eternal and even Bharat Electronics. So the winners are always here. But also we have a couple of more winners with us. They are a technical and fundamental guests. Joining us are Kush Bora and Aditya Shah. A very good afternoon to both of you. But Kush, I'll start with you. Der aaye durust aaye after 14 months. Of course, the chart setups are looking very strong and it's a healthy downtick in the day's trade. What will be your views now for both Nifty and Nifty Bank?
Hey, hi Sharad. Always the wordsmith, aren't you? What a lovely introduction that was for us and the markets. Thank you so much for that. No, you're right. Der aaye durust aaye, sabr ka phal meetha hota hai. Let's not forget, 4 साल की महाभयंकर रैली थी. 1 साल का consolidation है. I'm pretty sure a few months, perhaps even a few years down the line, this will look like that year of consolidation where Nifty made a base and then started its next bull run on the upper side. So I think there is merit to this consolidation as well. It was a healthy one. I understand when you're going through that pain of consolidation, it always looks terrible and it feels terrible. But I think this is a healthy thing that's happened for the market. On the whole, I think once we've achieved the new highs that we've done today, I think there is a lot more upside to be had from a near-term perspective. If you see, there is a rising trend line support that comes in for the Nifty. I won't be surprised that a minor pullback comes about, not even considering what's happened today. We're practically flat right now. But, on the whole, even if we slip another 200 points, the pace has shifted higher from 25,800 to 26,000 now. So if we do indeed dip to those levels, it will be a good buying opportunity, risk reward ratio favorable for targets of 26,500 and 26,800, perhaps even for December series, who knows. So yes, I remain constructive on Nifty, after the kind of moves that it has made. Bank Nifty even more so, like I have been for some time. Our second target of 59,500 on the Bank Nifty was hit. We've revised that to 60,200, 60,900. Those are our working targets for the next month, perhaps even 2 months time frame. So yes, you could remain long on the indices. If you're creating fresh shorts, then I would suggest perhaps wait up a day or two. Once the enthusiasm settles, even if there is some downward move, get into it with a more favorable risk reward ratio. So Nifty, Bank Nifty, both constructive, targets revised on the upside, stay long.
Kush, we have spoken about the large caps a lot, and I want to know about your picks. Will there be large caps or something in the mid cap space? Because we have spoken a lot about large caps, but largely the mids have been overlooked. Can you say?
Sure. My firm view, and let me reiterate, my firm view is that the bulk of the money for the next 10, 15 years in the Indian markets will still be made in the mid and the small cap space. There is a lot of pain, when your portfolios don't look, in the green when the Nifty is at an all-time high. But trust me, that's the last 2-3 years, not barring the current one. If you go see the kind of returns that you've made, right? Indian market journey is still starting. We could be, overstressed in terms of valuations. We may have run up quite a bit, not doing well right now. All of that is fine. But firm believer that the bulk of the money and the bulk of the wealth for the next 10 years will still be made in the small and the mid cap space.
Okay. So, let me ask you this, Kush. Good afternoon, Hiral here. If you're looking at the mid cap and the small cap index right now, with the pain that is there, are the charts also indicating strength over the next couple of months?
Hi, Hiral. So look, mid-cap index already hit, its all-time high levels some time back. It's trading close to those levels. So I don't think there is too much of a worry there. I think what Sharath mentioned, that's the more interesting part, which is even if the indices, the small and or rather the mid-cap in this case and Nifty 500, in broadly speaking terms, have hit, new highs or are coming close to those levels. The constituents haven't really done as well, and that's where the pain is. But I think the trickle-down effect will come in. You will see Nifty hitting highs, then, as we discussed, the mid-cap space hitting highs. And I think small caps will eventually catch up. And maybe Aditya can throw more light on it. Once the earnings start to pick up, I think you will start to see traction in these names. So yes, the indices are showing strength. Mid-cap index is consolidating with a mild positive bias. And so is the small cap index. But I think the trickle-down effect will come in sooner rather than later.
Okay. So what would your top picks be, Kush?
They would be from the small and the mid cap space after all the discussion.
I think that's what everyone is waiting then.
So I'm still constructive on Coromandel. We had a discussion around this yesterday where 2360 was the first target. Guess the high of the day, 23,590.9. 59.9. So I think, we're there almost on the first target. I think you could still hold on to this one for the second target of 24.25. Revise your stop losses upwards from 22.40 to 22.80. The other one is Signity Tech. This one has also seen very interesting moves in the last few sessions. Medium term trend positive. Supports at the 20-day moving average respected for the last month or so, and the stock trending higher. Volumes on the upside, very healthy. So all in all, Signity Tech a buy for targets of 19.10 and a stop loss at 17.95.
Focus is shifting to small caps and mid caps. Okay, Ashok Leyland is in focus today. The stock jumped nearly 6% after the fresh channel checks by BNK Securities pointed to a strong commercial vehicle upcycle. Vendors and dealers are signaling robust dispatches for November and a solid schedule through the rest of FY25. With the cycle expected to run well into FY27 to 28. Let's go across to Somit for further details. Somit, seems like an upcycle is at play for commercial vehicles.
Yes, definitely an upcycle is the reason why the stock is up 6.5% in trade, and this is the biggest move that we have seen for Ashok Leyland in quite a long time. Now, what was the reason? Yes, the BNK Securities conducted a channel check, and what was the outcome coming in from that channel check was the fact that they're expecting Ashok Leyland's November wholesale numbers to be anywhere between 12,000 to 13,000 sales in the month of November, and this is a good uptake of around 30% on a YY basis. Moreover, their discussions with the vendors and dealers that also indicates that the December month could also be strong, and this strong or upcycle will easily continue at least till March 2026. Moreover, they're saying that whenever in past they have seen as MHCV upcycle starting in, that at least lasts for the next 2 years. So that should be the case even this time around for Ashok Leyland, and they're expecting that in FY27 the FY19 peak number that we had seen previously should be in FY27 we should topple that, and in FY28 the numbers will be much more better compared to FY27, and that could be another record year for commercial vehicles as per B&K Securities. Now if you look at the overall analyst view here for Ashok Leyland, the consensus target price now stands at close to 157 rupees, which is largely at par with what the current market price is. And given how the analysts are divided on the counter, if you could bring back the earlier plate, 75% of the analysts have a buy rating, 15% have hold, and 10% have 10% of them have a sell rating. So there could be an upgrade in the target price that could come in for Ashok Leyland going forward. Now if you look at the valuations for Ashok Leyland, the 12-month forward P stands at 31 times, while the 5-year average is at 24 times. But do remember, the 5-year average also has down cycle valuation. So in an up cycle, the valuations will be much more compared to what the 5-year average has been. And if you look at, apart from this, the company also announced that there would be a merger between Hinduja Leyland Finance and NDL Ventures, and analysts believe that even that merger could lead to a value unlocking going forward for Ashok Leyland.
Thank you very much, Soumit, for this detailed analysis in this space. Aditya, getting you here. Aditya, now there are two important peers in this space. Now Tata Motors commercial vehicle is also here. Ashok Leyland, Soumit discussed about it, and a positive growth triggers for both these stocks coming in. If you had to choose one of them, which would be better and why?
So from my perspective, there's a third tier as well, which is Royal Enfield and iSure, that also has got a commercial vehicle business there. But firstly, from a demand perspective, I think the demand will continue to remain strong over the period of next 3 to 5 years as the economy continues to get government support on infrastructure, on whole host of investments that the economy, that the government is really doing in the economy. The infrastructure space and the commercial vehicle space should continue to do well. In my opinion, my number one choice will remain Ashok Leyland. Ashok Leyland will do tremendously well over the period of next 3 to 5 years. Stocks a little bit more expensive, and there's been a management volatility over the period of last 3 to 5 years in Ashok Leyland. That is one of the concerns. But from a demand perspective, I think all three companies should have strong demand over the period of next 3 to 5 years. Ashok Leyland and then Eicher Motors will continue to be my pick. I'm just studying Tata Motors more with respect to only their CV business. That is also a profitable business. But trying to understand at what valuation is that a buy. So from my perspective right now, stick to Ashok Leyland and Eicher.
Okay, iSure also an interesting one. In fact, Bank of America Merrill Lynch has also come out with their report, and what they are saying is that Maruti's market share has come off in November to 39% versus a festive season high of 43%. That's a big difference that we're picking up over there. That stock is under pressure as well, and this possibly points to some tapering that is happening when it comes to the small car demand as the discounts were pulled back. When you talk about Hyundai and M&M, they saw some recouping in market share as well. In the two-wheeler space, Hero is shining at almost 35% market share, and this is a second solid month when it comes to numbers for a Hero motor. That stock did see some bit of a downtick, but pretty much managing to be flat, and it has now actually gained share on a YTD basis. And Aisha's Royal Enfield has continued to be strong with almost 110,000 plus domestic sales number in the retail side. In fact, in the pickup that we've seen in truck segment, and that has come in after a gap, and that is absolutely noteworthy. The electric vehicle volumes in the two-wheeler and the passenger vehicle segment have moderated as well. So that's the view coming in. When you talk about the auto sector as a whole, in fact, Monday will be interesting to see what numbers come in for the month of November so far. At least this is data that you could be picking in from what Vahan is indicating right now. But moving on, let's quickly look at the other aspect that we need to talk about is one stock, that is IKS Health. Let's pull up that one on the screens. And that stock was seeing gains of nearly 1.5% in trade as we speak. When you talk about IKS as well, as we know, it's a tech-enabled healthcare solution provider offering revenue optimization, clinical support solutions, and digital health solutions. In fact, recently, they launched a new office in Coimbatore, and they're looking to expand to accommodate operations for the US market foray. My colleague Varsha spoke with the company's leadership team, that is whole-time director Nithya Balasubramanian, and she said that the company aims to maintain the current margin trajectory, and expects the second half to be stronger, which will mainly be driven by a robust deal pipeline. Let's quickly listen into that conversation first.
Let me start a question with the margin outlook, because in Q2, company has seen a good uptick in margin. So what's the outlook for margin when it comes to FY26?
Hi, good morning, and thank you for having me. I think we have always guided the street that we think the early to mid 30s in terms of EBITDA margins is what is sustainable for us. Of course, we are very happy that we got to that range a lot earlier than what we thought. And that's got to do with much stronger execution in terms of the business model transformation that we wanted to achieve with Equity. Equity, some of you will remember, that is an acquisition we had made a couple of years ago. And we have been able to deploy a combination of our technology as well as the optimal onshore-offshore mix to be able to achieve this transformation. So a lot of the transformation has already come through, and that's what you see reflected in the margins. So going forward, we believe this early to mid 30s range is sustainable for us.
Understood. And Nithya, talking about the H2, how is H2 looking now? Why I'm asking this is because how's the enrollment season in US winters and holiday impact your second half? If you could highlight the seasonality impact on IKS when it comes to H2.
Sure. The enrollment season doesn't have an impact on our business because we actually work with the physician organizations and not with the payers or the insurers. There is a little bit of seasonality when I look at our revenue cycle management business. The holiday season does tend to be a little bit more muted. But that being said, for a company that's still growing in a market that's still underpenetrated, my quarters are dependent on which customers am I signing on, which customers am I scaling up. So you might not be able to witness that seasonality depending on on the pipeline that's scaling up. So holiday season tends to be a little soft just on the revenue cycle management side of business.
Understood. Talking about the pipeline, Nithya, how does pipeline, especially for the large deals, look like after a closure of few deals over the last few quarters that you have done? If you could talk about the active pipeline of large deal, if any.
We don't share details of the pipeline, but I can tell you that we are very, very optimistic when we look at the pipeline. I think since Q3 of last year, we have seen several large platform deals come through. The first one was actually in Q3. A platform deal for us is where a customer is taking all 16 features off the platform from the get-go. We believe that the platform is able to deliver a compounding effect on the economic value add that we are able to deliver to the customer. So we're really looking forward to continued strong execution on the deals that we have signed. And of course, very optimistic when we look at the pipeline going forward.
And also on the client addition strategy, because I believe there was some downtick in the client addition in the last few quarters. If you could update us on that, and also your client addition strategy, if any.
Oh, that's entirely intentional. So when we acquired Equity, we actually acquired 800 plus customers. Legacy IKS had about 50 at that point of time. And we have been proactively cutting the tail. So Equity used to work with a large number of very small physician groups, 1, 2, 3 physicians. That tail is what that we have been cutting out. And you will see that the number has come down all the way from 850 to now 640 odd. We believe there is maybe another couple of quarters of this tail cutting and stabilization yet to play out. Once done, you'll start to see that number go up. But otherwise, we've been talking to you about the large deals that we are signing on every quarter. And that's been around 5 or 4 deals that we've been talking to you ever since we became listed.
Understood. Also, Nithya, talking about the debt, what's the debt that you have on your book? And I believe by FY27 you wanted to become a debt-free. So are you on track on that?
Yes, we do believe we are on track to be net debt free by FY27. We had acquired a debt of $120 million at the time of acquisition of equity to support the transaction. We have, in fact, recently refinanced that, and that $120 million is down to $50 million. Net debt position, we'll talk to you when we report the numbers next.
Also, Nithya, almost 95% of your revenue comes from US, and some part of it comes from Australia and Canada. So, any plans? I know US is a big market for you, and you still want to cover the market share, but any plans to expand geographically in the coming years?
None at all. We believe that there is enough and more to do in the US. As I mentioned before, it's a very underpenetrated market. It's a $240 billion TAM. Where only about 35 billion is penetrated. So there's a very long growth runway. So for us right now, it's hunker down, focus on execution in the US.
Right. And Nithya, so if I want to talk about the sales growth in the last 3 years, the revenue growth has been around 50% to 52%. Though I'm not asking for FY26 numbers per se, but over a longer period of time, maybe for next 2 years or 3 years, what is the target that you have set for yourself when it comes to growth? Because 52% of growth that you've shown, will you be able to sustain this growth, or what's the target, if any?
So for us, the way we think about growth is also long-term. And when we say long-term, I'm talking 5, 7 year, 10 year, however long a time frame that you want to look at, because this is a market that's actually going to expand over a fairly long time frame. And given the competitive edge that we have with our platform, our relationship with customers, the access to data that we have to mature tech, we believe that we should be able to compound much faster than the market. The outsourcing market, which I mentioned earlier as being around $35 billion, is expanding at 12%. And we believe, given our unique position, we should be able to grow much faster than that 12% number. So that's the goal that we are seeking over the long term.
Understood. So any, I know I'm stretching on this, but any quantitative number that you could, you can share with us, any target that you have internally when it comes to growth for the next 3 years?
No, I think this is the only guidance we have, which is that we should be able to grow much faster than the market growth rates, so that we can keep gaining market share.
That's the management of IKS Health talking. Let's just pull up the chart. It's up almost 1.5% in the day's trade as well. And momentum, it sees that it's there in the stock. There's not much volatility in the day's trade. Kush, what will be your views in this stock? You can just pull up a long-term chart also to actually understand, because it was recently listed, so the information won't be so much. But if you had to take a bet on this counter, does it look fine in this risk-reward ratio?
It's very constructive on this one actually, because 23 weeks of consolidation, the stock's actually not done anything practically. But now if you see, base formation was done, the movement on the upper side is fairly healthy. Also, if you see the September quarter, the institutional activity has been very healthy, where FIS and DIS both amped up their stakes in this stock. It's a good space to be in. All in all, I think it's a very good idea to perhaps at least have some allocation towards. I'll not be surprised to see the stock hit the 1850 and then the 2000 mark in the next few quarters, and a favorable risk reward ratio, so a stop near the 1550 mark. So a healthy risk reward ratio, stock coming out of a long consolidation, institutional activity also picked up. So all in all, I think this appears to be a good price point to enter IKS. So very constructive on IKS.
You coming in when it comes to IKS solutions, but stay with us, Kush and Aditya. We'll quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
hit record highs. Okay, woohoo! Right. There we have it. We are at all-time highs for the Indian market.
Just a number over there, and yes, those all-time highs will come. There will be many more records there, but the fact that this has been a long fought battle, it's come after reform.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए जोरदार तालियां.
The NDTV profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Welcome and welcome back. You're watching India Market Close on what has been a very exciting day in the equity markets. I'm Alex Matthew, and of course, you already were listening to Hiral Dadia as well as Sharad Dubey. Good afternoon, guys. Good afternoon. Great start earlier. You had that play card also.
I can
Nifty all-time high.
see Alex peeping like this.
And that's a wonderful RHS from our team where we are seeing that happening.
Yeah. So, well, it was an exciting morning, and you had the party poppers, and you had the excitement from both Neeraj and Tamanna. We were just waiting with bated breath, and finally it happened. But of course, since that point, I
think we'll be able to celebrate that excitement when we have that closing high.
You know what? I think that it's just going to be another couple of days, and you're going to test that again because we're at 26,200. We're pretty much flat on the Nifty 50, but we've held at that point. You've seen selling from those higher levels, but it's been a pretty narrow range. If you can look at the screen, you'll be able to tell just that. Less than 100 points also, if I'm not mistaken, from the high point to the low point. We'll check that for you in just a bit. But the broader market's not doing too badly either. Yes, there is red on the screen, but just about flat for the mid-cap index, small-cap index down about 1/3%. But tell you what, before we get into a few of the individual stocks that are moving the needle here for these indexes, let's talk about an important update from the perspective of special economic zones. The government is gearing up for a major policy revamp when it comes to these SEZs, and it's aimed at making these economic zones far more productive and industry friendly, from easier movement of goods between SEZs and the domestic market to allowing Indian firms access to spare SEZ capacity. Let's talk about what the current update there is. We're joined by Rishabh, who has all of that exclusive information. Rishabh, what is happening here and what are the key details to focus on?
What we're picking up is that the government is working on a fresh policy for special economic zones or SEZs. A policy revamp is in the works. Remember, there is already an existing SEZ Act and the government wants to make tweaks to it, and that is to make SEZs more and more competitive. Also, given the context of a lot of headwinds that have come India's way in terms of export competitiveness, global uncertainties, tariff headwinds. So to battle all of them, it's very, very important that the SEZs that have been a crucial part of exports are to be made competitive. Remember, these rules haven't been changed in a while, so these changes are being talked about. Inter-ministerial consultations are on, and what we're picking up on that front is the fact that the government is basically enabling to make smoother the movement of goods between SEZs as well as the domestic market, and that will help cut costs. It will help speed up production. What will also be a part of these policy revamp is to making sure available and is to make available that the spare capacity that is currently within SEZs, that is absorbed by domestic firms at a rapid pace. What we're also seeing is the fact that rationalizing custom duties is going to be a big part of it, and rationalizing these tariffs and these custom duty for SEZs specifically will be a part of this policy revamp. What we're seeing is that the domestic industry could also be allowed to pay for these SEZ services in INR. That is also expected to boost their competitiveness with regards to this. What we're picking up is the fact that it could be coming out closer to the budget. Remember, it's not listed in the winter session bills. So what we're guessing is that it will be closer to the budget that this sort of policy revamp will come out. It might come out as a tweak to existing act, which is the SEZ Act, and that is what we will continue to track very closely.
All right, Rishabh, thanks so much for getting us those details. Now, when you had the last major space mission, there was a conversation that you were having about the Indian ecosystem with regard to aerospace and technology, and there are quite a few important companies that are emerging, startups that are emerging and breaking through. One of them is Skyroot, which is in the aerospace area, and in fact, the Prime Minister was inaugurating Skyroot's Infinity Campus. He made a big announcement when he was there. What did he say? He was talking about how the government is looking now to open up the nuclear sector to private players for the first time. Listen in.
रिफॉर्म्स का हमारा दायरा भी लगातार बढ़ रहा है. जैसे हमने स्पेस इनोवेशन को प्राइवेट सेक्टर के लिए ओपन किया, वैसे ही हम एक बहुत महत्वपूर्ण सेक्टर में भी कदम उठाने जा रहे हैं. हम न्यूक्लियर सेक्टर को भी ओपन करने की तरफ आगे बढ़ रहे हैं. इस सेक्टर में भी हम प्राइवेट सेक्टर की सशक्त भूमिका की नींव रखने जा रहे हैं। इससे स्मॉल मॉड्यूलर रिएक्टर, एडवांस रिएक्टर्स और न्यूक्लियर इनोवेशन में अवसर बनेंगे। यह रिफॉर्म हमारी एनर्जी सिक्योरिटी और टेक्नोलॉजिकल लीडरशिप को नई शक्ति देगा।
Okay, so I mean, on the back of this, it actually opens up a potential surge in terms of orders for companies like L&T, Walchand and Nagar Industries. You have HCC, BHEL, all of these companies that will be in focus. In fact, when this announcement came, you have seen that surge that has come in on these EPC and manufacturing companies, because these companies already supply critical components and services to the nuclear sector and stand to benefit for this massive increase. We're talking about currently around 8,000 megawatts, which potentially they've said that by 2032 will go up to almost around 22,500 megawatts.
Wow.
So that surge that you're anticipating in terms of where the demand goes, all of these suppliers are the ones who are going to benefit.
So largely everything has been in the public space. The privatization comes in, and then startups also come in.
So it's very interesting, because if you go back to the budget speech from this year, last budget speech, there's a very clear mention of modular nuclear reactors. What are modular nuclear reactors? So far, you've used fission. Nuclear fission technology, which requires a very large setup. So Fukushima, Chernobyl also, right? These are very large setups.
Now this is coming in smaller ways.
You use fusion technology in modular nuclear reactors, which are much smaller. This is actually being used in the US. It's not something that is widespread, but it could make a lot of sense, especially when you talk about India's requirements to set up renewable capacity.
Right. So on the back of this, Kush, any of the companies that look good on the charts from the names that we mentioned, we're talking about L&T, Walchand Nagar Industries, HCC, BHEL, there's something called as there is KSB, Azad Engineering, Ratnamani Metals, all of these who stand to benefit.
So here are a couple of names stand out, and those are the ones that have already been on our buy list. So Azad Engineering was something that we've discussed time and again. A steady, gradual, uptrend on this one. Every dip near the 20 and the 50-day moving average band, always gets bought on, or at least has been bought on in the last month and a half or so. L&T we've been constructive on for some time. 4,000 threshold, being taken out. The stock is sustaining above that, so this could this could do very well going forward as well. Now, the other ones could be the dark horses, which is HCC and Walchand Nagar. Both these stocks have had a massive dip. They are starting to see some revival, perhaps on the back of this news. But whether it's sustainable or not, I think it's it's a little too early to call. So I would stick to the ones that have been doing well. So L&T and Azad Engineering are the two that look good to me, even after the kind of moves that they've already made.
Okay, L&T, Azad Engineering, 2 picks coming in from there. But it's that time of the day we're talking about profit intelligence, and one stock that we're identifying over here is a Thangamel Jewellers. The reason why we've picked up this one is because that stock is seeing profit booking after the solid run-up that the stock has seen in the last 20-25 trading sessions. Let me head across to my colleague Varsha, who's going to get us all the details. Varsha, what are you picking up? One, what has led to this kind of a rally when you talk about this counter? And secondly, is there further moat that is left for investors?
Well, thank you so much for that. I'll be talking about 5 things what's working for this company. Let me start with, the strong revenue and profit growth that the company has seen, number 1. Number 2, volume growth, which was seen in Q2 despite the gold rally. Also, a Chennai Metro expansion, which is the growth catalyst for this company. Then strong festive traction is also one of the reasons why we are seeing this company doing well. And lastly, increased FII and DII interest. Let me start with strong revenue growth and profit growth. If you see, a company has seen almost a 5-year CAGR of revenue growth of around 23.8%, while profit growth in the last 5 years has been 21.1%. So overall, a strong set of growth that the company has seen. Talking about the second parameter, which is volume growth, which was seen in Q2 despite global, rather gold rally. If you see, the volume growth was around 8.6% in Q2, and the volume growth was first time in the last 7 months. Now, talking about the Chennai metro expansion, which is the third catalyst which is working for this company. If you see, new stores is expected to contribute almost 20% of the annual revenue, and this expansion will be funded by internal accrual, customer advances, and moderate borrowings. Talking about the strong festive traction, which is also the other catalyst for this country, for this stock. I'm sorry. If you see, the October 2025 marked record-breaking month. Sales were up 175% year on year. Now, talking about a very interesting take over here. If you see the increasing stake of FIIs and DIIs in this company, which is a positive catalyst for this company. If you see, FIIs has increased their stake from 0.16% to almost 4.6% in 2025, while DII stake has also increased from 11.4% to 15 odd percent. So strong interest coming from FIIs and DIIs as well. Lastly, I also want to highlight about the areas of concern when it comes to this company. If you see, overall rising debt due to expansion and gold prices is one of the risk or concerns that this company has. Also fluctuating ROC. Now this might be because of the aggressive expansion that the company is seeing, and the profit is yet to contribute to the financials, and hence you're seeing that stretched ROE or the pressure in the ROCE. Lastly, if you see, the valuations were never cheap for this company. If I were to talk about the rising debt, let's deep dive into this. If you see, the debt has been increased from 548 crore to 750 crore, while fluctuating ROCE is also one of the areas of concern, wherein in FY22 the ROCE was around 11%, which has come down to 14% because of their increased expansion, which has pressurized ROC. Lastly, if I were to talk about the valuations, there you see if you see the company, the TTM PE of this company is around 55x, while if you see, the competitors are trading much below to what this stock is being trading at. So yes, considering the growth catalyst, everything is baked in when it comes to this company. So this is also one area of concern. But overall, these are all the 5 parameters that is working for this company, and hence we have seen a strong rally when it comes to Thangamile.
Thank you so much, Varsha, for that. Aditya, if you have to look at a Thangamile as compared to the other jewelers as well, what would you advise investors to do, and any preferences that you have?
So on all of this space, price growth over the last 1 year has been about 50 to 100%, and that is driving the revenue growth for all of these companies. Volume growth has been minimal, and in some cases, volume growth has been degrowth as well, and that is a concern for me. If gold prices correct or have a time correction, all of these companies will start to report negative revenue growth, which will in turn mean that profitability also takes a hit. So from my perspective, the valuation at which these stocks are trading 50, 55, 60 times multiple does not leave any margin of safety for any of these gold makers. High gold prices undergoing some bit of time correction could be undermining of all of these companies, and that could be an opportunity to buy these companies undergo time correction. Mind you, Thangamile has tripled out over the last 1.5 to 2 years, and a lot of the growth has already been priced in. So from my perspective, I'll be very careful of the stock at this stage.
Speaking of rare earth, Ashwini Vaishnav has stated an important commentary for this segment. The government also approved almost a 7,300 crore rupees rare earth magnet scheme. The key cabinet announcements, let's go through them. This scheme itself expected to create a capacity of 6,000 million tons per annum, and the word is permanent magnets. Their applications will be coming in the new age space, that is your EV, aerospace, defense, and even medical equipment going ahead. Electronic, auto companies, steel companies, they stand to benefit from it. But this pull out the 2 charts. One is of course GMDC, and other is the Midwest Gold. It's a small cap company, but these two are seeing a direct kind of an impact in this stock. So just to get into perspective, I would avoid the low volume counter of Midwest Gold, but GMDC, Kush, I need your views on this. What are the technical levels looking like for GMDC? Because these are very short-term trades when it comes to this mining plays, because a lot of news flows actually reverse also. But overall, positionally, is there any good trade happening here?
Yeah, first of all, it's a good call on avoiding Midwest as a stock. It's a circuit-to-circuit stock if you see, I mean, on the way up and on the way down. So definitely not recommended for retail investors. And yes, as far as GMDC goes, the medium-term structure on this one is bullish. There's a rising